Mic check, mic check. Test on this. Mic check, mic check. Mic check, mic check.
The committee will come to order. Good morning. Our first and only order of business today is H.R. 7024, the Tax Relief for American Families and Workers Act of 2024. The bill before us today is a result of a bipartisan conversation this committee started more than 10 years ago about how to reform the tax code in a way that supports workers, families, and small businesses. That conversation, which continued over 40 bipartisan hearings, led to the 2017 tax law, which was shaped by ideas championed by several members on both sides of this committee. After the 2017 tax law was signed into law, we saw economic growth surge a full point higher than the previous 10-year average. Unemployment and poverty dropped to their lowest rates in 50 years. And we saw the fastest 2-year growth in wages in 2 decades. Last year, at our committee field hearings in places like Petersburg, West Virginia, Yukon, Oklahoma, Peachtree City, Georgia, we heard directly from the American people about how these policies helped their families, supported workers, and grew jobs in small businesses. But with some of these provisions phasing out or expiring, we have more work to do. Right now, we at the Ways and Means Committee have an opportunity, as my friend Mr. Neal often says, to do big things. Right now, this bill contains important provisions that individually have bipartisan support. Democrats have voted to extend R&D expensing. Republicans, they created the child tax credit and support minimum work requirements to promote a connection to the workforce and greater prosperity. When we travel back to our districts next week, we can show our constituents who are struggling with inflation and high interest rates that when Congress works together, we can still achieve big things. Bipartisan tax relief that grows wages, supports better jobs, gives families more breathing room, and keeps America competitive on the world stage. The Tax Relief for American Families and Workers Act builds on many of the key provisions in the 2017 tax law that led to a roaring economy and raised workers' pay. After that law was enacted, research and development investments skyrocketed by 18% when it had been growing at a meager 1% for the prior 5 years. Restoring this provision will not only preserve over $70 billion in R&D investment, but also help our manufacturing sector, which does the most R&D, allowing us to keep pace with China and other industrial nations. We also saw how small businesses benefited from interest deductibility. Companies increased their investment by 17% and reduced their levels of debt. Right now, small and mid-sized businesses are getting hammered by interest rates that are the highest in 23 years. Restoring this provision will create more than 850,000 jobs and $58 billion in additional take-home pay for workers. This bill also expands 100% expensing, which allows employers to fully deduct the cost of equipment and machines that increase productivity and worker wages. When this policy was originally implemented, investment in American businesses grew 20%. Under this bill, investment will grow by an additional $400 billion. Restoring this policy will increase wages, create more than 70,000 jobs, and incentivize more companies to bring their manufacturing back to the United States. In addition to building on these proven policies, we are also taking steps to rebuild American communities and grow small businesses. This bill includes tax relief for communities across the country that have been upended by man-made and natural disasters. We are also cutting red tape for small businesses with a less burdensome reporting threshold for subcontractors' work, the first update to the threshold in more than 70 years. Just as important, this bill will ensure that parents can finally catch a break by building on the current child tax credit that supports families and rewards work. And finally, we are going after waste and fraud that has come to define so many pandemic-era programs. This bill will save over $70 billion in taxpayer dollars by closing out the COVID-era employee retention tax credit program, which has become overrun with fraud and ballooned and cost 6 times larger than CBO's original estimate. The bill before us today represents bipartisan policies that are proven and effective. Common sense fixes to the tax code that will rebuild our communities, support better jobs and wages, and grow our economy. Many members on both sides of this committee are co-sponsors of the different policies in this legislation. I look forward to today's conversation, and let's remind the American people that this committee can accomplish when we work together. Recognize the ranking member, Mr. Neal.
Thank you, Mr. Chairman. Democrats are here today because of a simple truth. When we invest in workers and families, we invest in our economy. Democrats' 2021 expansion of the child tax credit put money back in the pockets of working families across the country, keeping the lights on and indeed children fed. The results were a resounding, historic reduction in child poverty and better lives for millions. These children are tomorrow's workers, and we need to acknowledge that. When Republicans blocked the extension of this vital tax relief for middle-class families, we never lost sight of its importance on this side. We worked tirelessly to see the child tax credit revitalized and renewed, while our colleagues on the other side have single-mindedly pursued tax breaks for the well-connected. We saw in their own tax scam last summer. Indeed, today's markup is only possible due to Democrats' insistence on putting workers and families first. While this bill is a start towards the future of America's children that they deserve, more could have been done. Our colleagues, once again, are letting politics get in the way of sound policy for America's working families by refusing to expand the credit to the extent that we desired on this side. This opportunity would come to the assistance of America's poorest children. If Democrats had their way, we'd have gone further. We know that when you grow the middle class, you grow the economy. A note of gratitude to Bill Clinton and his vision for having offered this up many decades ago, and we have witnessed much of the success because of it. Our committee has important work to do, and the American people depend upon us for that purpose. When we held the majority, we passed historic legislation that kick-started our record economic growth, which has included 15 million new jobs during the last 3 years, creating jobs for American workers across the country. Poor children need that same opportunity. Instead of working together, looking for an opportunity to sign significant legislation into law, once again, we spent our time on the impeachment inquiry, 4 potential government shutdowns, and on workable legislation. Let's put the stunting aside and get on to governing, as we will attempt this morning. I want to acknowledge the great work of our colleagues, who not only fought for the child tax credit, but also critical disaster relief, low-income housing tax credits, tax relief to strengthen our relationship with Taiwan, among other priorities. But a very stubborn reminder, being born to poverty should not be a lifetime of condemnation to poverty. Cutting childhood poverty, putting families on a pathway to prosperity, and setting parents up to better participate in our workforce are all within our reach. It's my hope this morning that we can take a meaningful step toward delivering on that very purpose for those children. I yield back, Mr. Chairman.
Thank you, Mr. Neal. The committee will now proceed to consideration of H.R. 7024, the Tax Relief for American Families and Workers Act of 2024. Without objection, the measure will be considered as read and open for amendment at any point. At this time, I offer an amendment in the nature of a substitute, which was distributed in advance, along with a green sheet explaining it. Without objection, the amendment in the nature of a substitute shall be considered as read, open for amendment at any point, and considered base text for purpose of amendment. I will now turn to Tom Bartold, Chief of Staff for the Joint Committee on Taxation, to provide the technical description of the amendment in the nature of a substitute, with an emphasis on the changes made since introduction. I ask that members hold their questions until after his presentation.
Thank you, Mr. Chairman. The committee members have before them 3 joint committee documents, JCX, which describes the underlying JCX-2, which describes the underlying legislation, JCX-4 on the green sheet, which describes the chairman's amendment in the nature of a substitute, and JCX-5, also on a green sheet, which provides the joint committee staff revenue estimates of the legislation before you. Legislation before you includes within it several measures that the committee has previously reported out. There are business tax provisions which suspend the research amortization under Section 174, suspend the change in the limitation on interest deductions under Code Section 163J, extend 100% bonus depreciation, and also make permanent a new higher level of expensing under Code Section 179. The committee has previously reported these items in substantially the same form. Likewise, the committee has previously reported out the legislation that provides reciprocal rules to mitigate possible double taxation for investments in Taiwan, and also disaster relief legislation and information related to relaxing the $600 threshold on certain information returns. The provisions that are new in the underlying legislation and are addressed in the chairman's amendment, the nature of a substitute, relate to the child tax credit. As you know, generally under present law, the child tax credit is partially refundable to the extent of earned income. The underlying legislation temporarily for tax years 2023, 2024, and 25 increases the limitation on refundability, increases the tax credit, and it allows for a look back to the preceding year in measuring earned income for a taxpayer to compute the amount of tax credit for which they may be eligible. The chairman's amendment in the nature of a substitute directs the Treasury to recompute the credit if it results in an overpayment and then to be refunded to the taxpayer. So essentially directs the Treasury to try and help the taxpayer get the best result possible. As the chairman noted in his opening remarks, the legislation also would suspend claims for credit for refund under the Employee Retention Tax Credit as of January 31st. It extends the statute of limitations for the IRS to pursue potentially invalid claims. It also defines an Employee Retention Tax Credit promoter and establishes certain penalties. The chairman's amendment, the nature of a substitute, changes a contingent fee based on the Employee Retention Tax Credit, and that to be a promoter, one has to not only charge a contingent fee related to that, but that such charges have to exceed a gross receipts test. The chairman's amendment, the nature of a substitute, also provides no inference language, which essentially clarifies the effective date on which promoter knowledge and due diligence standards are required. The other new aspect of the legislation before you, as noted in the opening statements, relates to the low-income housing tax credit. This legislation provides a temporary increase in state allocations for years 2023, 2024, and 2025, and relaxes the limitation that applies to certain bond finance properties to qualify for the 4% credit outside of the state credit cap. That provides a brief summary of this legislation. I'd be happy to answer any questions that the members might have.
Are there any technical questions about the amendment in the nature of a substitute? Mr. Doggett?
Well, thank you, Mr. Barthold. In announcing this deal, Chairman Smith, I think, correctly declared that it locks in his words, $600 billion in business tax breaks. Does that $600 billion figure represent a reasonable approximation of the 10-year cost of making these three provisions permanent?
Well, Mr. Doggett, the only provision that's made permanent is the expansion of Section 179.
I understand that. I'm asking you, I assume the $600 billion figure wasn't pulled out of the air, and it looked to me like it was a pretty reasonable estimate if you made all of these provisions permanent, these three, of what they would cost over 10 years. Does that seem reasonable to you, the chairman's statement?
Mr. Doggett, I'd have to go back and check with my colleagues. I don't have before me estimates that, of making 163J bonus and Section 174 expensing
You do-
permanent.
you did
But I can provide that to you, sir.
You did calculate that back when they were made permanent in a previous bill.
We've made some estimates in the past, and I'll get you an updated estimate.
I'll take the chairman's word, if not yours yet. Did the 2017 Republican tax bill reduce the statutory rate for corporations by 40%?
Reduced the statutory rate from
It was about
35% to 21%. Yes, sir.
the original bill reduced it by about 40%, didn't it?
Yes, sir.
Yes, sir. And by originally limiting these three business provisions that we're considering today to 5 years, was the 10-year score for that 2017 bill made to appear much lower than if they had been made permanent?
The amortization of research expenditures did reduce the overall cost of business provisions in the 2017 bill. The phase out of bonus depreciation also reduced the overall cost relative to permanence of that provision. And similarly, the tightened limitation on interest deductibility limited the overall revenue estimate of the business provisions of the 2017 Act.
Thank you. I've seen a tax foundation report that a single worker with 2 children, say a single mom with 2 children, who earns the average wage paid, an effective tax rate, including their payroll taxes, of about 20%. From your work, does that sound about right?
I assume that the calculation includes payroll taxes.
Yes, sir. That's what I said.
And so if we had payroll taxes and then that worker were in the 10 or one of the next brackets up, the marginal tax rate on labor income would be approximately 20%.
And about 2 years ago, your staff did an analysis of the 2017 tax law and its effect, and it found the average effective tax rate paid by the 88 largest American multinationals was a mere 7.8%, didn't it?
We presented some material to the committee looking at largest multinationals and the average tax rate that they had paid over the prior
Yes, sir.
3 years.
And will some of those corporations that are paying a 7.8% effective rate be eligible to lower their effective rate even further by adoption of this bill today?
The calculation that we did 2 years ago was based on prior year law.
Yes.
It did include bonus depreciation, so if we extend bonus depreciation, you might have similar results, but there are a lot of different factors that go into calculating the average tax
Let me
rate.
ask you about then one of the other specifics in the time that remains. Do you agree with the Wall Street Journal editorial board and what they wrote yesterday that the interest portions of this bill, quote, create a greater incentive for debt?
You mean the relaxation of the limitation under Section 163J?
Yes, sir, I do.
It
30
does
seconds that
make it
remain.
less costly for businesses to
So it would be a really-
use debt finance.
Be a
Yes,
real
sir.
advantage for a private equity company that loads up a target acquisition company with new debt to finance the buyout of a nursing home or some kind of healthcare practice. It assures that we will have a continued permissive standard that will encourage private equity buyouts.
It makes debt finance cheaper than it would otherwise, yes, sir.
Thank you so much. Thank you, Mr. Chairman.
Further technical questions? Mr. Smucker is recognized.
Thank you, Mr. Bartold. Could you walk us through the new Section 105 and what it instructs the IRS to do?
Section 105 directs the IRS to recompute a tax credit, the child tax credit, for which the taxpayer might be eligible in looking back to prior year income to make a compare to see if the taxpayer would be better off using prior year earned income than current year earned income, and encourages the Secretary to use authority to provide the taxpayer with the better result. In other words, if it were to increase the amount of credit for which the taxpayer would be eligible, it would be refunded, the additional amount would be refunded to the taxpayer.
There's been a suggestion by some that the IRS will have discretion to process updated tax returns on some timeline determined by politics. Under this bill, does the Biden administration have such discretion on processing tax returns?
There's no new authority provided, Mr. Smucker. It's the IRS can review returns under general procedures and under current regulations, but there's no new authority provided. What Section 105 does is it directs the Secretary to essentially do a test on the calculation of the child tax credit using the ability that's established in the underlying legislation to determine the amount of credit based on prior year income or current earned income or current year earned income, and to try to ensure that the taxpayer ends up with the better result.
So does that process need to be expedited?
It doesn't need to be expedited. It's regular processing of returns. Okay. My colleague corrects me that the language actually said it directs the IRS to do this as expeditiously as possible, but it does not. It doesn't have a timeline of saying this has to be done in a certain number of days. It's just.
But it does ask them
don't
to
sit on
expedite the process.
To the extent possible.
Yes. All right. Thank you.
Ms. Moore is recognized for technical questions.
Thank you so much, Mr. Chairman, and thank you, Mr. Bartow. I have a question. I just want to start out by saying that the proposal before us, HR 7024, seems to be a slight improvement to the extent that it's based on numbers of children instead of the flat phase-in rate for one child. Under current law, I just want to be clear about what we're talking about. Under current law, a taxpayer who say, had any numbers of children making $7.25 an hour, in order to get the maximum refundable credit under present law, they'd have to work 70 hours a week to do it. Am I sort of hitting the mark there?
Yep, Ms. Moore, yes. If you're assuming that taxpayers basically a minimum wage earner working 50 weeks a year, to have to work 70 hours a week under the example that you're positing.
Okay, thank you. Now, under this proposal, where we multiply it by numbers of children, that would be so much more a greater improvement, but the taxpayer would have to work. But if we had the same phase-in rate of 15%, and the person had 2 children, how many hours would they have to work in order to be able to get the maximum credit?
Ms. Moore, under present law, as you noted, the phase-in rate is 15%. Under the proposal, the phase-in rate is essentially multiplied by the number of children. So the phase-in rate in your example is increased to 30%.
Right.
And under the same facts that you'd posited before, you'd have to work a little bit over 40 hours per week in order to achieve the maximum amount of refundable credit. Also note that under the legislation, the maximum amount of refundable credit is also increased by the legislation.
Okay, so the statutory phase-in rate of 15%, is that, I don't understand. would the phase-in rate have to be changed in order for someone making $7.25 an hour who worked 42 hours a week? They'd get the maximum credit at the 15% rate?
The way the statute works, Ms. Moore, is the 15% rate is multiplied by the number of children.
Okay,
So that took it from 15 to 30%, and that's what produced your calculation in your example.
Okay.
Of 42 hours per week of work would get you the maximum refundable credit under this
Okay,
legislation.
so if that person only had one child under this new proposal, they still would not be able to get the maximum by working 42 hours a week. They'd still have to work 70 hours?
They'd have to work substantially more than 40 hours per week, yes.
Okay,
Yes, ma'am.
thank you. All right. So people have argued that people don't make $7.25 an hour, although we do know they do. We talk a lot about the poverty in rural areas and working at the truck stop and the inability of the employer to provide those extra benefits. So let's just say they were making $10 an hour. How many hours under this proposal would a taxpayer have to work in order to be allowed the maximum refundable credit?
If we go back to your example of 2 children,
Yeah.
so a 30% phase-in, the taxpayer would have to work approximately 30 hours per week to achieve the maximum refundable credit.
Okay, all right. So, with the same phase-in rate of 15%?
15% multiplied by 2 for the
Multiplied
the 2 children.
So if you have one child at $10 an hour, how many hours would you have to work?
Approximately 50 hours.
50 hours.
50 hours per week, yes.
Okay, thank you. So just to make it clear, the phase-out for this program for the single parent is $200,000 of income, right?
Yes, that's correct.
Okay, so can you just tell me the range of taxpayers, I mean earnings, not taxpayers, 'cause they're all working under these examples, but a mom with 2 kids, what is what's the minimum? What is the range of taxpayers at earnings, bottom to top, that they, at 15%, would they receive the maximum credit? Okay, Bert.
Ms. Moore, as you noted, any taxpayer with, as long as you have earned income up to $200,000, you can achieve the maximum. The point
But
that
you
were
wouldn't
making,
have to be working 70 hours a week.
not if you were earning substantially above $50,000.
Right. I mean, because you could be a consultant or something and work 1 hour a month and still get the full credit.
If
Yeah.
if you were paid a good amount for that 1 hour, yes, ma'am.
Right. All right. Well, Mr. Chairman, thank you for your indulgence. I needed to ask these questions, and I yield back.
Thank you. Mr. Schweikert is recognized for technical questions.
Thank you, Mr. Chairman, as we have so much stuff piled up on our desk. Mr. Bartol, first could we go to the 1099-M? And I just want to get my head around, within your numbers, the interaction between going from the $600 to $1,000, but also the withholding. Help me understand, because I'm seeing your cost, and then there's a second-degree question on that is the IRS, I believe, had been putting out its own notice that on 1099-Ks, they were going to go to $5,000. With their, I don't know they had that internal authority. So just, I'm trying to understand both the scoring and how its effect on the withholding side.
The legislation before you, Mr. Schweikert, doesn't address 1099-K.
No, it's 1099M.
Right.
But my reason is, over here, we're having to do legislation to move 1099M from 600 to 1,000, but over here, I'm hearing the IRS is doing, and it was more of a comment of, they have that authority?
The Secretary has general authority in terms of establishing some reporting standards. So in this case, it seems they interpreted that authority to increase the report on the 1099.
But you can see my curiosity over here. I'm looking at M and these scores, and I'm trying to figure out how much on that score is the difference between, reporting at $600 to $1,000, and what my interaction with withholding is over here. And I'm getting these scores, but and then the second part is, but the IRS over here on K is already claiming they're going to go to 1,000. What would its score be? You see, I'm just trying to, they're not lining up.
Yes, Mr. Swigert. Well, in terms of budget reporting, the IRS's adjustment on the 1099K, and this is going to be kind of wonky, but it will be reflected. Whatever effect this has will be reflected in the next baseline of receipts. Now, in information reporting, our general approach and the way things seem to work out is where there are information reports, we get more honest reporting by taxpayers, and you get more tax paid. So when levels are reduced and more people receive returns, we see more income reported. There can be more income earned. If there's fewer reports, sometimes people just forget that they need to report, or sometimes they think that if they did not get an information return, the income is tax-free. And so that's the essence of the economics behind the estimate that we provided in this provision. And in this provision, we're taking the threshold from $600 to $1,000. There'll be some people that say, oh, didn't get a 1099 here, don't have to report that, don't have to report that income, that's the loss. The 1099K, the $5,000 adjustment that the IRS has produced, we have not estimated that. It was not a legislative proposal. Any effects that has on compliance in the future will be reflected in the next receipts baseline produced by the
It's somewhat of an academic curiosity if one of your staff ever has on the 1099M and its interaction on saying, okay, here's the reporting side and here's the withholding side. So that I do have a one-off sort of question on the disaster relief. Have you ever seen a study that actually touches on a very uncomfortable subject for us as members of Congress on the moral hazard issue of here's actually, the federal participation after disaster in interaction of individuals choosing to go without insurance or substantially underinsuring with our pattern on hurricanes, fires, earthquakes, other things. Is there any literature there that touches your scoring?
Well, the very short answer is I'm not aware recently of any literature on moral hazard, the moral hazard aspects of activity that Congress has made to provide for enhanced loss recovery, casualty loss recovery after disasters. I understand conceptually the point that you're making, and I'll work with some of my colleagues to do a review. This particular case, the estimate here is not forward-looking, since the estimate here relates to a provision that is looking at defined disasters, such as the train derailment in Ohio, such as the fires in California, is kind of a well-defined universe of losses that were not covered by insurance, and so there's not really moral hazard going backwards.
Yeah, and Mr. Chairman, I appreciate your patience, but in both the derailment, the fires, there were also parties held liable, and so I'm trying to get my head around both the interactions, and then prospectively, do you see a future cost on the moral hazard side, and that may require a joint economic committee and
I'll talk with my colleagues about what we may know about the economic literature in terms of moral hazard and repeated policies that might promote moral hazard behavior.
Thank you, Mr. Bartlett. Mr. Chairman.
Thank you. Mr. Byers recognized.
Mr. Chairman, thank you very much. Mr. Barthold, I have 3 questions. First was on timing. We've read in some of the literature that there's a 5-to-1 argument that businesses are getting 5 times as much as the kids in this child tax credit. One of the specific concerns is the estimated revenue effects for the R&D tax deduction for 2024 is that the cost is $82.7 billion. Does that mean that businesses are getting an $82.7 billion tax benefit from the government?
The on JCX 5, the 82.7 billion that you're referring to, revenue estimate, the provision under present law. Let me back up. Under present law, businesses are required to amortize over 5 years domestic research expenses. So they pay $100 for research expense today. They can recover that as a cost of doing business at a rate of 20 over 5 years. That has been the law for since 2017. So businesses have been holding back and suspending the amount of costs that they incurred that they may deduct under amortization. What the current legislation does is it says we're going to retroactively say, no, you can expense it all. And so that means all the suspended amounts may be deducted now as opposed to deducted in the future. So that's why there's a minus 82.7 in the first year. It's a big lump reflecting expenses claimed now, which would have been claimed over the next several years.
So these are just timing issues. So if you actually look at both the business tax deductions, which are for 3 years, and the CTC provisions, which are for 3 years, and both of them looked at over a 10-year period of time, they become roughly equivalent.
I get you. Well, I will say that what we're reporting are cash flow receipts numbers.
Right. So there is the time value of money.
Correct.
But the time value of money is true for both the families that are receiving the cash and for the businesses that are being able to depreciate their stuff faster.
That's correct, sir.
One of the things that's held out to us, Mr. Barthold, often is that we tend to extend tax extenders, and yet we have no way to predict the future except that right now we have a divided government. We're often in a divided government phase. We have a filibuster in virtually every case. Is there any reason to think that we would have to necessarily accept tax extenders without being able to address child tax credits, or vice versa? Pump up child tax credits without touching tax extenders?
Mr. Byer, the question you're posing really requires someone with a lot more political insight than I possess.
Yeah. There is the occasional trifecta. But on the ERTC, second question, $79 billion roughly. Who is not getting that benefit anymore? Or should I restate it? Is that not, in fact, an increase in business tax revenues?
Under, the employee retention tax credit is claimed by business owners. What has been reported by the IRS, what we've seen, what's been brought to the committee, is that a large number of amended returns have been flooding into the IRS claiming the employee retention tax credit. And some of the findings of the IRS is that some of the claims are suspect. The legislation before you says that no claims for credit or refund will be valid if submitted to the IRS after January 31st. So to the extent that claims have been coming in at rates of thousands per day to the IRS throughout the fall, this would cut off the amount of claims, potentially a large number of false claims.
But the legitimate claims is essentially going to be an increase in the taxes paid by businesses.
It's possible that there could be some legitimate business owner that has delayed filing an amended return because they did not know about the provision to begin with. So yes, that is possible, sir.
One last quick question. When was the last time interest was not deductible?
Well, the Congress has limited interest in a number of instances. We have limited interest on large mortgages, for example. In the 1986 Tax Act, the Congress determined that it was not appropriate for individuals to deduct consumer interest, such as credit card interest. But business interest expense has generally been deductible, I think, back to pretty much the beginning of the corporate income tax, sir.
Okay, great. Thank you. Mr. Chairman, I yield back.
Ms. Sanchez?
Thank you. Mr. Barthold, how much does a family have to earn in order to claim the child tax credit currently?
Ms. Sanchez, you were talking about the refundable portion?
Correct.
Okay, well then $2,500 earned income threshold to begin to make a claim for the refundable portion.
Okay, to begin to make a claim for the refundable portion. And as income goes up, that the amount of the child tax credit that they can claim goes up too. Is that correct?
That's correct. That's the 15% phase-in rate that was that Ms. Moore was discussing earlier.
Okay. Is there anything in the current bill that is before us today that allows the lowest income earners who are supporting children to claim the credit if they don't earn $2,501?
That threshold is not changed.
Okay, so then essentially those income earners who are the very lowest income earners in the country, who have children to support, who presumably have the greatest need, are not helped whatsoever in this bill. Is that correct?
Ms. Sanchez, my colleague notes that in the legislation before you, one of the changes is that you're not restricted just to looking at current year earned income, but you can look at prior year earned income. So it's possible that someone that has a current year income of less than $2,500 below the threshold may have had an income above $2,500 in the prior year. They would be eligible for the child tax credit on the basis of the prior year's earned income.
Okay, fair enough. But if somebody doesn't earn more than $2,500 in successive years, they get zero help under this bill. Is that correct?
There's no change there. That's correct.
So they can't claim any of the child tax credit even if they have children?
Not the refundable portion.
Not the refundable portion. Okay, thank you very much. I have no more questions. I yield back.
Further technical questions? Seeing none, we'll move to strike the last word. Recognize Mr. Buchanan.
Thank you, Mr. Chairman. I want to move to strike the last word. America is an economic and strategic crossroads, and now is the time for action. To be competitive on the global stage, the U.S. needs a tax code that has the proper incentives and can make a big difference in terms of the impact. By passing H.R. 7024 today, we can restore R&D credit, championed by my good friend Ron Estes, who has worked long and hard on this issue. Also, like Ron, Jody Arrington has made a big difference in terms of the Line Act to allow full expensing, to encourage businesses to make the necessary investments to purchase equipment and machinery. Let me just mention, a lot of the focus always is on big corporations. But I'll just tell you my story, and everybody has a story up here. But my wife and I started in Detroit with 2 stores, printing stores, built it to 800 across the country, and then we sold it, and we got in the car business and did a roll-up and ended up with a lot of car dealerships, 25. So we built 2 big businesses, created over 5,000 jobs, but I can tell you, these are things we had to deal with every year, trying to hang on a little bit more of what we earned. So these tax incentives allow you to be able to expand, grow, hire people, and make a big difference. And as someone that's put a lot of people in business over the years, I can tell you it's a huge difference. The other point I just want to make is that in terms of, if you look at the makeup in most communities, in Sarasota, at the time I was the chairman of the chamber there, 2,600 businesses, and 90% of those businesses are 15 employees or less, 20 employees or less. That's who we're talking about. Little businesses become big businesses. I also had the opportunity to chair the Florida Chamber, and it was the same thing. Over 100,000 businesses, 90%, I'd say, is 25 employees or less. That's who we're talking about with a lot of these policies. They want the corporate guys take care of themselves, want to help them compete here and abroad. I'm all for that. But ideally, my heart, where I'm at, is in startups, entrepreneurship, and helping companies that are successful. The other thing I'll just tell you, most people that start a business, you can check with the U.S. Chamber, was their number, 90% of people start a business are out of business in 5 years for one reason or another. So that's why we want to do everything we can to help these businesses be more prosperous. And I can tell you, big businesses, if you look back, many of them, like Apple and others, started in their garage. And so we want to encourage small businesses to do better, and that's what these policies will do. I can tell you full expensing is a huge thing. To me, it's a timing issue. Normally, you write something over 5 years, and then they came out with bonus depreciation and a lot of these different things, and now you get full expensing. So whether you're buying or selling, it makes a big difference. Many times, someone might not buy that used tractor or tractor, but they end up buying it because they made a little extra money. They can hang on a little bit more of that money because of the depreciation. So I just want to also understand, in terms of interest deductibility, as I mentioned, we're in the franchise business. We put a lot of people in business. Interest deductibility is a huge deal. It might be, you might focus on the corporate thing, but I can tell you for small businesses, that deduction makes a big difference. They can hang on a little bit more of what they earn and use that to expand and grow their business. So I'm just very excited about where we're at today, and it looks like we're going to do something somewhat on a bipartisan basis. But I can tell you from the business side, it's a good thing, primarily for small and medium-sized businesses. And with that, Mr. Chairman, I yield back.
Thank you. Mr. Doggett is recognized. Strike the last word.
Thank you, Mr. Chairman. The short-lived child tax credit enacted in 2021, wish it had been 1921, was a landmark accomplishment in reducing child poverty. For the first time, disadvantaged families could receive their tax credit monthly to use for groceries, child care, getting to work, health care, and it was fully refundable, available to the very poorest families in America. Republicans blocked the renewal of the child tax credit and said we just couldn't afford to lift that many poor children out of poverty. But they never can give up on lifting corporations out of paying a reasonable tax rate. In announcing this tax deal, Chairman Smith correctly and candidly declares that the bill locks in $600 billion in extended business tax breaks. Enacting these provisions incrementally does two things. This is from the Committee for a Responsible Federal Budget. It suggests that maybe the chairman overestimated things a little, but I accept his number. They say $525 billion is the permanent cost for these tax breaks, and the permanent cost for the child tax credit is $80 billion. Doing it incrementally, while you intend for it to be permanent, ensures you never really show the true cost to the debt for unpaid tax breaks, and it assures that you create the misimpression that children are being treated the same way as corporations, when in fact, under the chairman's numbers, children get $1 for every $4 for corporations. This is not a 50-50 split between children and corporate power. Once again, this committee is saying its priority is clear, and it's certainly not children. Given how little assistance poor Americans have usually received from this committee, I respect the advocates who are ready to take whatever they can get. The expanded child tax credit in 2021 lifted 5 million children out of poverty, and this bill, it'll lift 8% of them out of poverty. Compromise is good, but compromising children is not. As our colleague Rosa DeLauro, who has steadfastly fought and authored this child tax credit for over a decade, declared, it lacks equity. It's keeping millions of children in preventable poverty, providing a massive tax cut to big corporations without offering middle and working class families true economic security. And who are these corporate beneficiaries? A host of big names who paid an average effective tax rate under 8%. These are the companies benefiting the most from our national security and doing the least to pay for it. Let's take two examples. Under today's bill, Taxes for Nike, which had an effective tax rate of 10% on profits of $4.5 billion in 2022, will be retroactively lowered by $195 million to an effective tax rate of 5%. No wonder they say, just do it. How about doing a little more for the children instead of for a company that is soaring to do just a little less? And how about Netflix? They did even better than Nike. On its 2022 profits of $4.5 billion, it paid an effective tax rate of a mere 2%. Today, this committee will grant it a tax refund of about $220 million. The results, a negative less than zero tax rate of minus 5%. Meanwhile, the Tax Foundation reports that a single mom who's struggling to get by and provide for her 2 children, who earns an average wage, pays an effective rate of 20%. So today, this committee approves sending $220 million to a corporation paying a 2% rate and little or nothing to the mom, some kind of a Netflix series that makes. And while some of these corporate provisions may have merit, even the Wall Street Journal calls this a, quote, retroactive sop to companies that already made investment decisions. And the Committee for Responsible Federal Budget, chaired by Mitch Daniels and Leon Panetta, not exactly a hotbed of liberalism, likewise concludes that this bill, quote, irresponsibly offers retroactive windfalls that will do nothing to help the economy. Unless the objective is pure corporate giveaways, the retroactive provisions should be dropped. Yes, this bill is bipartisan, just like our overall tax code overflows with loopholes and special advantages to the powerful on a bipartisan basis. That doesn't make it right. This deal only continues slanting the tax code against working families, justifying their public skepticism about whose side we're on. I believe we have a duty to fight for working families to reform this broken tax code, and today's bill moves in just the wrong and opposite direction. I yield back.
Thank you, Mr. Doggett. I wish the Wall Street Journal would use your numbers in reporting. Mr. Smith is recognized to strike the last word.
Thank you, Mr. Chairman, and thank you. I thank all my colleagues for gathering to take some action here. I'm especially pleased that this bill contains language I offered to maintain a higher cap on interest expensing to help address the cost of borrowing. My colleague, Mr. Buchanan, elaborated on the importance of that. I think it's very important to note that capital-intensive businesses like manufacturing and food service, for example, often borrow to invest so they can grow their business and ultimately create more jobs. In the current high interest rate environment, ensuring the deductibility of interest is vital to maintaining existing capital investment and encouraging new investment. Interest deductibility alongside full deductibility for domestic research and development and ensuring small businesses can expense their capital expenditures up front is vital to having the best possible environment for developing new products in America, manufacturing them here and selling them around the world to grow our economy while we are able to seize opportunity of growth elsewhere. Appreciate the strong bipartisan support for this provision, especially the partnership of co-lead Mr. Morelli, as well as Mr. Hearn, Mr. Schneider, here on the Ways and Means Committee, in getting this provision to the point where we are marking it up today. We do, however, have more work to do. I also hope we have future opportunities to consider tax priorities of members of this committee which were left out of the package in order to ensure we have a product which addresses the most glaring needs like EBITDA, R&D, and bonus depreciation in a timely fashion. While I appreciate that today's bill, including the child tax credit changes, is offset by addressing abuses in the employee retention tax credit, the CTC changes in it represent a compromise. I hope we can continue working on CTC to get it to a place where it most effectively rewards working families for hard work and professional advancement. And I look forward to our continued work to make permanent the Tax Cuts and Jobs Act tax cuts for working families and small businesses, which expire in 2025. I cannot offer enough emphasis to that. I hope that we move forward here in a positive direction to strengthen our country during some difficult times. Thank you, Mr. Chairman. I yield back.
Mr. Thompson is recognized to strike the last word.
Thank you, Mr. Chairman. I want to thank you and Mr. Neal, the ranking member, as well as Mr. Stubbe, for the work that you all done on this overall package, and in particular in the disaster relief provisions that are in the bill that we're going to mark up today. It's the second time our committee's met to advance disaster tax relief. And I was glad that the last time we visited this, the committee voted unanimously to move that measure forward. And I appreciate that we've been able to work in a bipartisan way on the issue of disaster relief in general. I have thousands of constituents facing taxes on a settlement award that they got from Pacific Gas and Electric Trust after their homes and businesses were burnt down. Those settlement payments will not make them whole. And the idea that they have to pay taxes on that and taxes on the lawyer fees associated with that is just absolutely wrong. And so this bill addresses that, and I'm grateful to see that relief in today's bill. With respect to the other provisions of the bill, I agree with my colleagues that business tax incentives should be fixed, although I would gently remind everyone that no Democrat on this committee voted in the first place to make the changes to R&D that we're fixing here today. I also share the view of many of my colleagues, which is that we ought to restore the full expanded tax credit, child tax credit, that we, the Democrats, passed during the pandemic. As been said, that measure cut childhood poverty in half. That is a monumental achievement for any Congress, and this one stops quite a bit short of that. So to be crystal clear, the credit prompted an historic reduction in child poverty. We should not let that escape us. I'm a bit disappointed the majority doesn't want to advance the most robust, best structured version of that child tax credit. That said, this bill improves the current status quo for children across America, and I plan to support passage of the measure. What we're doing today is a steep departure from where what our Republican colleagues are doing in other policy areas. And I want to commend Chairman Smith for showing a willingness to work cooperatively across the aisle on major policy issues as we're seeing today. That's not what we're seeing from the party leadership, specifically the head of the party, the last president, and the current speaker, who have both in the last couple of days come out and said, don't do anything on major issues. And I'm speaking specifically on the issue of border security and immigration reform, because they think it is a political issue that will help them in the next elections. I think that's wrong. We should continue to work across party lines to get things done. And Chairman Smith, thank you for your effort in that regard. I hope to see this bill swiftly considered on the House floor when we get back. A lot of people are counting on it. Again, thank you for your work in this bipartisan effort, and I yield back the balance of my time.
Thank you, Mr. Thompson. The subcommittee chairman of tax, Mr. Kelly, who has, I believe, 5 different provisions that he's led in this bill. Mr. Kelly.
Thank you, Chairman. I want to first thank you and your staff for the work that you put into this pro-growth tax package in the past few months. Not too often in the current political climate we work in do we see a bipartisan, bicameral bill, and I applaud all of us for the efforts to get that done. Now, just like the Tax Cuts and Jobs Act of 2017, this pro-growth tax policy for the American people and the American worker, this bill specifically focuses on those living the American dream. That's the small business owners in America. This bipartisan bill, businesses of all shapes and sizes can deduct the cost of research and development investment here in the United States immediately and not over 5 years. From TCJA, R&D alone created never-before-seen levels of new jobs in the United States by keeping jobs here in America and in supporting the U.S. economy. Small business owners are the backbone of this country, and I applaud this committee for keeping these Americans at the forefront of this bill. This bill also extends to American families across the country with the child tax credit, originally a Republican provision added into law in 1997. This bill keeps the child tax credit structure that our Democrat colleagues have been supportive of and championed through the years, while also rewarding work, allowing flexibility for parents, and supporting middle-income families across this country that we've championed in the 2017 TCJA. Additionally, it touches on disaster relief for communities across the country, and most significantly, with the Taiwan and U.S. end to double taxation, the first time in history for a provision like this. Truly, this shows the impact this committee has on economic security throughout the world, and what an economic and diplomatic partnership with the United States means on the global stage. I would be remiss to forget many of the bipartisan bills that myself and my colleagues have been working on and look forward to continuing to work together on in this Congress. The Neighborhood Homes Investment Act that Representative Higgins and I led. This bipartisan bicameral bill would revitalize distressed urban, suburban, and rural neighborhoods with federal income tax credits, mobilizing private investment to build and rehabilitate homes for lower and middle income owners. And additionally, the Broadband Tax Treatment Act that Representative Jimmy Panetta and I have been spearheading, and the crucial bills many of our colleagues have led, such as Jody Arrington's Supply Chain Disruptions Act, properly known by many of his LIFO. I look forward to voting on this tax package today in committee and looking forward to the final passage on the House floor in the coming months. But more than anything else, I think that we can demonstrate today to the American public who is losing so much faith and trust in the way we govern, to say that, you know what, it's good to see that from time to time you all can actually work together to help us, not a particular political party, but to the American people. I think it's time to while we praise something that's being done, then turn around and say, but this is what should have been done and it wasn't done quickly enough, or spearheaded too many private things. I got to tell you, being a small business person, it's not an easy climate to work in. And when you can see the fact that only profitable companies pay taxes, we forget about wage taxes, we forget about all the benefits packages are taken care of, we forget about all those things and say, well, these people are taking advantage of a tax credit or a tax program that doesn't tax them far enough or hard enough. Anytime I hear the cost of something, I like to think that, well, that means that taxpayers benefit, that they don't have to do this. If it's a cost to the government, that means it's a benefit for the taxpayer. They don't have to weigh in as heavily as we'd like them to do all the time. So for those of you who've been in the small business activity, I would really suggest, and one of my asks would be for people in the private sector, please run for public office, because there's nothing more challenging than have to make payroll 2 or 3 times a month and actually do it yourself. And come hell or high water, if you're in a political office, you get paid whether the economy is good or whether the economy is bad. In the world I live in, your very survival depends on the ability you have to run a profitable business and take care of all the fringe benefits and all the other things you do in your communities. What is unsaid about all of this is the amount of money that private businesses put into communities to help out in almost every single urgent need that's out there. So I'd like to think at the end of the day, we actually tell the mule, don't worry, we're going to unload the wagon. So, Mr. Chairman, thank you so much for your work. And Ranking Member Neal, it's a pleasure, but I also want to take a moment to wish a happy birthday to my good friend, Mr. Pasquale. We had a chance to spend a few moments last night together. One of the true joys of being here is working with people like you, sir. I yield back.
Mr. Larson is recognized.
Well, thank you, Mr. Chairman, and thank Mr. Esty. I want to thank Mr. Esty for his incredible work on this, on the R&D tax credit, and it's good when you see a bipartisan effort that comes forward. I want to associate myself with the remarks of Mr. Doggett and Mr. Thompson as well, and only say this, and I deeply appreciate the efforts that Mr. Neal has made with Mr. Smith to try to broaden and expand the incredible work of Susan Delbene and Rosa DeLauro on a child tax credit. Here's the rub for us on this side, I haven't talked to a single business person, small, medium, or large, who's opposed to the child tax credit. They favor it because they see what it does. All those things we talk about in entrepreneur, imagine how many of those children are future entrepreneurs. And with a decent upbringing, instead of in poverty in the wealthiest nation in the world, how hard is it for us to extend those benefits to them? You heard the statistics that Mr. Doggett went over in terms of how businesses are benefited. We need that in order to compete globally. That's important, and that will attract more business, more job creation, and increase the strength that we vitally need to compete with China globally. But so will the child tax credit. And so, from the perspective of many of us on this side, this is not a big ask in terms of what it means for your fellow Americans, children. And that's why we will continue to push for that, because I think it's appropriate. And I thought it was an appropriate balance to strike between R&D tax credits and a child tax credit. And I'll end with this. No business, no businessman, no small, large, or medium that I've spoken with back in the district as the lead with Mr. Esty on the R&D tax credit, not one of them has said, yeah, geez, but we can't really do that child tax credit. That would really interfere with the trajectory of our business and how we're going to be perceived. But it is a reflection on this committee, and it is a reflection, though progress has been made, gains have been made, we know that we could do much better. I yield back.
Mr. Schweikert, the leader of the 1099-M issue, recognized to strike the last word.
Thank you, Mr. Chairman. I had two things I wanted to sort of put into the record. In regards to sort of the employer retention credit and the creation of the definition of promoter, and the understanding that the current statutory mechanisms of what is liability, the knowing standard covers both, fine. But also, we have to deal with the reality, and hopefully I don't know if there's a way to draft understanding of, as the IRS changed and built its rule set, sometimes a couple of years into the program, and how that will affect discussions. There are bad actors in the employer retention, and then there's those who I believe were following the rules as they had them, and that there's an understanding. It's a knowing standard. If you had a business that may have played games with some of the data they gave you, you had to know. So how do you make sure that as the IRS, the Justice Department, and others look at the language we produce today, that it's a focus on those who broke the rules, played games, fine, they should be punished. Those who followed the rules as they were at the time have a level of, they followed the rules. So that's a concern. I've met with committee lawyers and even some of our staff, and they've somewhat assured me that that's actually the standard that should be followed. So that is what it is. Second thing, Mr. Chairman, is in regards to things like expensing, research and development expensing, understand from an economic standpoint, they're timing effects. You do research and development, do you take it over 5 years or take it on the time you do it? It's still, you're taking it. Why this is such a big effect right now is with higher interest rates. When I'm doing it over 5 years, I have to cover the financing costs of that. And that's actually what's created some of the distortion on research and development. But it's not some new magic tax cut. Do you take your depreciation today or take it over a few years? You're still taking the depreciation. The distorting effect was timing and having to finance that. And with that, I yield back, Mr. Chairman.
Mr. Blumenauer is recognized to strike the last word.
Thank you, Mr. Chairman. What we're doing here today is illustrates how we've moved away from actually directly paying for things and doing it indirectly through the tax code. And I appreciate the work that has been done to try and refine some of these areas, try and fix the problems that was created with the research tax credit. And there's some bipartisan work that's been done. My colleagues have referenced it, like on the disaster. We can find in the complexity of the tax code things that we can rationalize and feel good about that make a difference for our constituents. But I am mindful of what Mr. Doggett reminded us of, when you take a step back on the overall impact. And we don't do that very often in terms of how all this works out. There are good things in the tax code. There are things we need to change. I have played the game myself, and a lot of things that relate to energy, what we did for the restaurants relief. I mean, there are a whole host of things that we're proud of that are important, and we find cooperative efforts. But we don't look at the complexity in total. We have created every year, after we complain about the problems administering the tax code, at the end of the day, we have made more complexity, more opportunities for people to game the system and seek advantage and rationalize advantages that if they were in its isolation wouldn't stand up. And it's created a system now that is expensive to administer, it is not fair, and it has all sorts of things here that we work hard to try and adjust. And I'm pleased that there is some bipartisan efforts to try and make those adjustments. We find areas where we can work together to try and help our constituents and the overall economy, but collectively, it's a mess. Collectively, it is not fair. Collectively, the way that we treat the people who need help the most are left out. And there's no clearer example than the treatment of the child tax credit. This should be a priority for everybody, and we can easily afford it, but somehow we're constrained by the system. And we do the trade-offs. I will reluctantly vote for this. We're better doing that than letting all this stuff lapse. But that doesn't mean that it's right. That doesn't mean that we can't do better. It doesn't mean that we have to bemoan the complexity and the inequities in the tax code, and then we turn around and make them worse. Every time we reach these points of extending tax provisions, I'm saddened because we don't take advantage of an opportunity to force us to look at the overall. You only have to put up with me for another 50 weeks. There are things that we're doing that I like. There are things that I will try and perhaps do some additional adjustment in terms of things like the historic tax credit, which we can document, makes a difference, and actually provides more tax benefit and revenue benefit for the federal government than it costs. And it enriches all our communities. But again, it's part of the complexity that gets played in a way that is against the overall interests of the American people, and I will say the business community. Because they're playing the tax game, they're spending a lot of time and money lobbying and looking. The best example, I think, is GE, that spent a lot more time engineering the tax code than engineering products that led to its collapse, notwithstanding Jack Welch being the entrepreneur of the year or whatever he was. He led to the destruction of that company. problems that we've seen with venture capital, hollowing out businesses and hurting communities. We keep layering this time and time again. I hope at some point there'll be an opportunity to take a step back and try and look at it in its totality. But as I say, I will reluctantly vote for it. I hope we can do a better job with the child tax credit, which everybody ought to embrace, and then move forward. Thank you for your indulgence.
Thank you. Mr. LaHood is recognized.
Thank you, Mr. Chairman, and I first want to commend you, Chairman Smith, on your tireless efforts in working across the aisle to get this package where it is today. The bill in front of us has many wins for working families and small businesses and is in direct response to many of the concerns that I hear from my constituents back in Illinois. I want to particularly highlight the inclusion of the affordable housing provisions in the package. Provisions that stem from my bill, which is the Affordable Housing Credit Improvement Act, which I've been proud to lead alongside my colleague, Representative Del Bene, in addition to Representatives Winstrup, Beyer, Tenney, and Panetta, and other co-leads. This bill has 212 co-sponsors in the House, 106 Democrats, 106 Republicans. 80% of the Ways and Means members are a part of this bill. If you think about the low-income housing tax credit, it was established 40 years ago under Ronald Reagan and has served as one of the nation's most successful models for affordable housing production, and the need to strengthen the credit is necessary now more than ever. Talk to any of your city mayors or municipalities or housing boards. The need for affordable housing is stronger than ever in our country. Between the pandemic, high interest rates, supply chain disruptions, inflation, and other economic factors, we are facing a severe shortage of affordable housing supply for low-income Americans. That is in rural areas, suburban areas, and urban areas. However, the inclusion of the two LIHTC provisions in the package being considered today, restoring the 12.5% allocation increase for 2023 through 2025 and lowering the bond financing threshold to 30% through 2025, with this, we can make the progress in addressing the crisis head on. And Mr. Chairman, I would like to submit for the record a letter signed by 88 of the leading national and statewide affordable housing and community development organizations expressing their strong support for the inclusion of these LIHTC provisions in the package before us.
Without objection.
Thank you. Estimates show that these provisions will result in the production of over 200,000 additional rental units for low-income households across the country. Moreover, this increase in production is projected to generate over $34 billion in wages and business income, significant economic gains that will provide a much-needed boost to your surrounding communities, essentially tripling the amount of the investment through the LIHTC tax credit. This is a giant stepping stone in tackling the affordable housing challenges that we all see and that are being felt at virtually every corner of this country and in all of our districts. I look forward to continuing our discussions to strengthen the housing credit as we move forward in the legislative process through the rest of the House and in the Senate. And again, I commend the great work that went into this package. I look forward to supporting the bill here in the committee later today and on the floor in the near future. With that, Mr. Chairman, I yield back.
Thank you for your great work on affordable housing, Mr. LaHood. The birthday boy, Mr. Pascrell.
Thank you for reminding everyone, Mr. Smith, Chairman. I want to associate myself with Earl Blumenauer's comments, and also thank you for the nod, Mr. Kelly from Pennsylvania. I'm going to vote for this piece of legislation. I think it's an attempt at fairness, falls far short of what, if I was writing the bill, would have obviously made some changes. I've been talking for the past 10 years, as many of you have, about tax reform. And we're talking about a very specific thing here about, there's no question in my mind that the child tax credit should have been elaborated on more. But you know, that corny saying, the enemy of the good is the perfect. It isn't that we should be happy to get what we can get. It's we do not have tax reform. We have not had tax reform in this country for 30 years. We talked about it in 2017. You don't want me to start talking about that, debacle. Of the advantage, the more advantage, the greater advantage we gave to those that have a few dollars. And there is no way to help those people in lower income, no way, unless you have tax fairness and unless you have tax reform. We couldn't even get the carried interest passed. We've been talking about that for 15 years. People on both sides of the aisle talked about it. It gives an unfair advantage. So I don't care if you raise the wages 5% every year, you are not going to shrink the gap in income or assets. Now you know, as well as we know, what you hide in your assets, how you hide it. We've given the tools to those people who have money to say, you're not going to get this, we're going to hide it. Done a good job. But if everybody, and you know, the major corporations, some of them don't pay any income tax, any corporate tax. That's the only way you're going to shrink the income gap, and I think that's what we should be about. It's not socialism, that's fairness. If capitalism is to work, we got to make it fair. When you make $1, you should have to pay whatever the tax is on it. I mean, we go home, another week off, but we go home and say everything's okay if we pass this piece of legislation. We don't. We've got to have some reform in how the tax system, which is a dual system, is set up in our country. Mr. Chairman, I think you agree with me on some of what I just said. I think that's fairness. And I'm going to offer an amendment to this, and I'll be brief. I'm trying to get out of here just like you. Today, on the SALT. Now, that will unsettle everyone. But the fact of the matter is, Lincoln knew what he was doing. Believe it or not. On a lot of things. Not just on human rights. And by the way, this is part of human rights, whether you can put food on the table in your house, whether you're able to do that. The SALT amendment that I want to introduce, Mr. Chairman, is going to be a Republican bill. So, which was, I think, 60 single and 120,000 for dual subscription income tax payment. I'm willing to lower it, but I'm telling you, at this point, I looked at all the tax laws that affect federal. It is the best way to begin the trek back to fairness of taxes that the federal government imposes. It's the best way. And we know that the earned income tax credit is one of the best ways to help those people who are less fortunate that are working. I hope you'll consider it, your own bill, your own amendment, it'll be in that form. I hope you'll be as anxious to vote for that as you are this bill. Because we got to end the day of double taxation in the United States of America, which is what the state and local tax business is all about. I yield back, Mr. Chairman, and thank you for the time.
Thank you. Mr. Winstrup, the leader of numerous provisions in this bill.
Thank you, Mr. Chairman. I move to strike the last word. And I want to thank you, Mr. Chairman, and all those involved, Mr. Neal, everybody involved with this process, getting us here today. And I'm pleased to be here today to mark up this important legislation because it represents to me a clear win for American families and for job creation in America. While the legislation we're considering is by no means perfect, I look at the agreement before us today and I see a whole lot that I like. And it sounds like we have many on both sides of the aisle that are willing to take the Reagan approach. If I can get 80% of what I want, I'll get it, I'll take it, and then we'll move on from there and fight for the other 20. And I hope that's what happens today. But when I think about tax policy, I think about making America the best place in the world to do business. I think the Tax Cuts and Jobs Act was a huge step towards making our tax code globally competitive and bringing more business investment back to the United States. The less it costs to produce a quality product, the less it costs on the shelf, and the more Americans can afford something. And since the TCJA passed, we've seen 0 corporate inversions. Instead, we've seen American businesses bringing back their overseas earnings and fuel investment and wage growth in the United States. The Tax Relief for American Families and Workers Act builds upon the progress made by the TCJA by enacting pro-growth changes that will incentivize greater investment in the United States. And this is key. This is key towards attempts to secure our supply chain, which we know we are very vulnerable in many, many areas. All sectors of our economy stand to benefit from the provisions of this package. It will support greater research and development. Manufacturers can expand, make capital investments, support small businesses trying to grow their operations. So I'm grateful to the Chairman for his work in negotiating critical provisions that will support more affordable housing development. It's important in Southern Ohio. I hear from my communities we need more housing, especially for the working class. As many times I call it workforce housing, and that's a win-win for everybody. So I'm proud to be one of the lead co-sponsors of the Affordable Housing Credit Improvement Act. And, you know, outside experts estimate that these provisions in the bill that we have will help finance the development of 200,000 new affordable housing units by 2025. We have working people in my district that are staying in homeless shelters and getting up and going to work each day. I want to reiterate my strong support for this package, but I want to touch on some other tax priorities that were not included, but I hope we can consider them soon. H.R. 2662, Collegiate Housing and Infrastructure Act, that I have with Ms. Sewell. It make college more affordable to students by eliminating an arbitrary distinction in the current tax code that allows colleges and universities to use charitable contributions to build and maintain student housing, but prevents other non-for-profit student housing entities like fraternities and sororities from doing the same. So not only would this legislation help improve housing affordability for students, it would also allow nonprofit student housing entities to use these tax-exempt funds on critical security measures. Right now, Jewish fraternities and sororities report that they have had to drastically increase security measures at a great cost in order to protect Jewish students who simply wish to live in peace. I also want to mention briefly H.R. 700, the Supply Chain Disruptions Relief Act. We know during the pandemic the supply chain issues were very clearly evident. We had a shortage of vehicle production, semiconductors we couldn't get. And, you know, auto dealers often use an inventory accounting method known as last in, first out, or LIFO, which requires dealerships to maintain a minimum level of inventory at the end of the year or risk triggering a large tax bill. So to reduce this LIFO recapture by the end of the tax year, businesses generally restock inventory at the start of the year because inventory shortfalls can be taxed as ordinary income. So the uncontrollable vehicle shortages that occurred in 2020 and 2021 prevented many of our community auto dealers from replacing their vehicles, which risks triggering a large tax bill if we don't act to provide relief. This is Mr. Arrington's bill, and I want to express my support for that as well. But I'm grateful for the work that's being done, for what we are doing here today, and I think it's a step in the right direction. And I guess I have 50 weeks left with Mr. Blumenauer, and we'll try and get as many things done as we possibly can. And yeah, I will try to make them count. Thank you, and I yield back.
Mr. Davis is recognized to strike the last word.
Thank you, Mr. Chairman. As a result of strong federal investment by Democrats and President Biden, especially the expanded child tax credit, child poverty dropped by almost half between 2020 and 2021, the lowest rate on record. Alarmingly, just 1 year after the Republican-led expiration of these poverty-lowering investments in workers and families, the child poverty rate more than doubled. The progress we made in 2021 shows that we can slash child poverty when we have the political will to do so. The 2021 child tax credit was so effective because it was advanced, completely refundable, and targeted to help the lowest income families. It cut poverty because it gave families with no income money for their children each month, in sharp contrast to this bill that only gives the maximum to 2 parents if they earn $31,000. The current bill will help more children and families than current law, but it will not cut poverty in half. This bill mirrors the TCJA, and the TCJA did not cut child poverty in half. This bill will not restore the 2020 Child and Dependent Care Tax Credit that gave up to $8,000 to working parents for child care costs for 2 or more children, much better than the current maximum of $2,100. This bill will not restore the 2021 Earned Income Tax Credit that helped foster and homeless youth or kept single workers from being taxed into poverty, totally excluding millions of younger workers. This bill will not remove income barriers to adoption, nor restore the above-the-line charitable deduction to help non-itemizers and the amazing charities that support our communities. This bill will not help cost-burden renters by implementing a refundable renter's tax credit. Although this bill includes some important improvements to the low-income housing tax credit, it leaves out a no-cost fix that would stop the current exclusion of homeless students and veterans from living in low-income housing tax credit financed housing. Also, it leaves out essential reforms to incentivize developers to prioritize extremely low-income households. Businesses and families need our help. This bill helps some, but it lacks the political will to cut child poverty in half. The Republican leadership's myopic focus on extreme policies has undermined our ability to enact broader tax reforms to support Americans. Listening to Representative Blumenauer reminded me of my mother, who used to tell us that right is right if nobody's right, and wrong is wrong if everybody is wrong. So every day that we delay action, poverty continues to poison the future for millions of our children and for our nation. Thank you very much, Mr. Chairman, and I yield back.
Thank you, Mr. Davis. Mr. Arrington is recognized to strike
you,
the
Mr.
last
Chairman.
word. Mr. Arrington is the leader of several provisions in this bill.
Please continue. Take as much time
And
as
you
you
are
like.
doing a
Mr.
wonderful job.
Ranking member, would you like to say a few words about? He'd like to strike a few last words that the chairman just said. Congratulations. Thank you for your leadership, both of you, on this bipartisan tax package. I've got a few things to say, so I'm going to try to get through this in the time that I have. There's a lot to say about it, so I'm not going to get everything, but I carried the Align Act, the business expensing, immediate 100% expensing. I'd like it to be made permanent, have that as a permanent fixture of the tax code, because according to Tax Foundation and other
groups. It's the most pro-growth tax provision in the tax code and certainly in the tax reform, the recent tax reform. And some say it will be as high as 0.5% of GDP growth in its impact, tens of thousands of jobs, and it's a cost recovery and an incentive for investment, growth, and job creation. And as I've always said, all boats rise on the tide of prosperity, and we saw that after TCJA. It wasn't perfect, but when you provide the incentive for the job creators in the great United States of America, and you give incentive for the risk takers in this country and the innovators, you know, they do what they do best. And all we do is take the burden off and infuse some economic freedom. They do the rest, and that's why we had record investment, record R&D investment, capital investment, record growth, and the lowest poverty rates. Again, all boats rose on the tide of prosperity. So thank you for your leadership on that. As budget chairman and obsessing about this unsustainable debt path and watching our nation barrel towards the cliff of a sovereign debt crisis, we're going to need the combination of reining in spending, running our government more effectively and efficiently, and especially in these entitlement programs, and we're going to need to grow the economy or create the conditions to grow. So it's cost reduction and growth. That's the equation. That's what got us out of World War II's indebtedness. Now we surpass that, and we're in relative peace and prosperity, so we're in big trouble, and we will experience an exponential increase in indebtedness, and nobody knows how long we can sustain it. So growth's a big part of that. And we need to return to pro-growth policies. And I thank my Democrat colleagues for working with us on that. And I think mostly that philosophy is shared by folks. Can't grow out of this level of debt, by the way. But you're going to need growth to get us there. If we have 1% growth over the 10-year budget window that CBO projects will be a paltry 2%, 1% over that's $3 trillion in deficit reduction. So we've got to grow. And we can if we put the right policies in place. Okay, business development companies. When we gave the 20% deduction to pass-through entities, limited liability corporations, REITs, partnerships, S-corps, this is a pass-through investment vehicle that allows more capital to small businesses. It's designed to help provide the lifeblood to small businesses, and it's proven, and there's about $300 billion in assets out today in small business through these vehicles. But just as importantly, it allows Main Street people like the folks I represent to actually have equity investments. I mean, I'm not a qualified investor. I don't even know what that means. But I don't like the fact that some people can invest in companies and others aren't qualified to do that. This is a Main Street retail investment that retirees are limited now because they don't get the 20% deduction that these other like entities do. We have an opportunity to level the playing field there. That's all I'm saying. And we don't have it in this tax package. I just encourage you, Mr. Chairman and Ranking Member, to consider that as I know this isn't the last bite at the apple here. I think that's just as good for the small businesses as some of the other provisions in there. Lastly, I know LIFO and the LIFO reserve and the hit that car dealers took. It's a unique business, capital intensive, inventory intensive. Listen, there is a tail to this pain. They cannot build up that reserve. We're not giving them a tax cut, tax break. We're deferring the tax penalty until they build the reserve up so we don't give a windfall to Treasury and they're not paying a penalty. And by the way, you know who pays the penalty? People buying cars. So they have to meet payroll, retain their employees, and they have to keep the cost of cars down so that we can drive to and from work, et cetera, et cetera, et cetera. So that to me, these are, I think, good measures that will serve the public in the long run, and I hope you consider them going forward. Thank you for the indulgence.
Thank you, Mr. Arrington. Ms. Sanchez is recognized.
Thank you, Chairman Smith. I'll admit from the start that I've been skeptical at best about the tax bill that our committee is considering today. But let me also assure my Ways and Means colleagues, anybody else who's watching these proceedings, that I, like most other tax-writing Democrats, am not anti-business when it comes to good faith efforts to improve our nation's tax code. I've been more than generous with my time, and I've very carefully considered the concerns that many of the corporate stakeholders who have asked to speak with me on this bill have said to me in terms of the need to extend business tax credits. But before I go on, I want to remind people that it was Republican tax writers who, under their 2017 Trump-authored tax scam, set the expiration of these 3 key business provisions, which are due to expire soon. I want to reiterate that I am not anti-growth or an anti-innovation member. In fact, I proudly co-sponsored bipartisan legislation led by Representative Larson that would address the R&D concerns we've all been hearing so much about. But I cannot, in good conscience, support a tax scheme that does relatively little to expand the amazing and transformational child tax credit that benefits babies, children, and working families across our country. This doesn't mean that I can't get to a yes on this tax package, because I have to hand it to Chairman Wyden and Smith. There are many strong provisions in this bill. From improving the key federal tax mechanism that increases the availability of affordable rental housing, including a very strong provision to help people experiencing homelessness, to providing enhanced disaster relief for those who are just trying to rebuild or recover, to addressing the issue of double taxation on U.S.-Taiwan cross-border investment. Those are strong provisions. But the interesting thing is that those really good reforms weren't part of the framework that majority tax writers originally floated before today. To me, that's a clear signal that House Republicans are capable of changes that would improve this bill. To that end, should my Republican colleagues consider thoughtfully and support the strong amendments that my fellow Democrats and I are offering today, I would happily join other members up and down this dais in voting yes to advance this bill to the House floor. I want to associate myself with the excellent remarks of my colleague, Mr. Doggett. This bill did not have to pit businesses against hungry children. It could have been equitable to both, and the fact that it isn't troubles me greatly. And with that, I yield back.
Mr. Ferguson is recognized. Strike the last word.
Thank you, Mr. Chairman, and both to you and to Ranking Member Neal. Thank you for your hard work, and want to also wish my friend and former mayor and the Mayor's Caucus a happy birthday as well. I know you've been around a long time. I understand you helped Noah build the ark, but we're glad that you're still with us. Anyway. Look, this is one of those moments where we all need to be reminded we very seldom ever get to vote on the bill we want. We get to vote on the bill that's in front of us. And that's what we have here. And we have a bill that does something that's good for families, and it does something that's good for business. And in doing so, for being good for business, that's also good for families. One of the things that we heard in a field hearing in Peachtree City, Georgia, with a company called NACO, run by David Bergman, was that being able to invest more in research and development, and then being able to expense the equipment and the supplies needed to turn his innovations into a product led to more people in his community getting a better job that pays more so they can afford a better house and be less reliant on subsidies from the federal government. Americans every single day really do care about going to a job where they can provide for their families. They really do care about living in a decent, affordable, safe place. They really do care about their kids getting educated. And for the most part, Americans really want to be left alone by this place. They just want to be who they want to be in this great country. So what this bill does is this bill addresses a couple of very, very key components of that. By investing in innovation and investing in American and allowing the companies to invest in machinery, technology, and their people, we advance and we stay ahead of the rest of the world. It is the thing that we do the best. Innovate, build it here in America, sell it around the world. All of that provides for better jobs, and every one of our communities will benefit from this. It really addresses a component of what Americans need, which is decent, affordable, safe places to live. Mr. LaHood's bill, dealing with the child, with the LIHTC, that has a profound effect in smaller and rural communities as well as in some of our larger communities, because it really does fit one of the gaps in our housing market. And it allows people to start and move up through the process to where they become market rate payers and eventually, hopefully, own their own house. So this bill does an awful lot. It does an awful lot for American competitiveness. It does a lot for American business, and that translates into a better quality of life for our fellow Americans. Mr. Doggett's poster that he put up that showed that this one particular bill seemed to be out of balance in his eyes. One of the things we left off of that is that this body and Congress has given so many benefits over the years to families that need assistance. What was not shown on that chart is what a family will receive with food assistance, with housing assistance, with energy assistance, with education assistance, tick down the line, transportation assistance. All of those things also go to the families. This is just so vitally important that we look at the business provisions of this in conjunction with the real things that are going to improve family life, child tax credits, and housing, and realize this is a big step forward for America. It's good for American business. It's good for American families. So, Mr. Chairman, Ranking Member, thank you again for your dedicated work on this. I know this has not been easy, but we look forward to supporting this resolution both here in committee and on the House floor. Thank you. I yield back.
Thank you, sir. Ms. Sewell is recognized to strike the last word.
Thank you, Mr. Chairman. I move to strike the last word. Our responsibility as members of this very distinguished committee is to examine our federal policies and programs in health, tax, trade, Social Security, worker and family support, and to bring the input of our constituency to the table when crafting legislation. As someone who represents a majority African American district, I must be ensured that what we're working on will actually improve the lives of not just some Americans, but all Americans, irrespective of race. The racial disparities are undeniable facts, especially in terms of health outcomes and economic opportunities. White households hold 10 times the wealth of Black households. These economic inequities do not come by happenstance. Rather, these disparities are the result of policy decisions that marginalize and devalue the health and economic well-being of people of color. To address the issue, we must acknowledge the problem. The bill before us today is only a starting point for the conversation that needs to occur. More needs to be done. Prior to the change made in 2021, in my district alone, 53% of the children, over half of all kids in my district, did not receive the full benefits of the CTC because it was not fully refundable. But by expanding the benefit amount and making it fully refundable and providing the credit on a monthly basis, we were able to drastically reduce child poverty and make a tremendous difference for low-income families. The bill before us today, however, while it does increase the tax credit for 3 years for some families, it doesn't for millions of children who live in poverty. The middle and working class families that are already eligible for CTC will not get the full benefit of a monthly payment, nor will they get a tax cut. This bill reflects a very unequal trade. It clearly provides businesses with major tax cuts for expenditures that I do believe are needed, like R&D and bonus depreciation. However, it does so on the backs of poor children. While I am in favor of some of these business deductions, not at the expense of helping working families, especially those in need, those who live below the poverty line, In fact, in my district, 20% of the families that I represent do live below the poverty line. It is estimated that between 2024 and 2026, the business tax cuts in this bill will cost $177 billion, outstripping the cost of CTC expansion in that same period 5 to 1. This is clearly unequitable. I do believe that if we are to make this bill better, we should accept the amendments that are being put forth by myself and my colleagues. I believe these amendments will elevate this legislation to the level that will best serve all our constituents and all Americans, business as well as American families. We can do both. With that, I yield back the balance of my time, Mr. Chairman.
Thank you. The leader of research and development, the gentleman who has advocated more to me on research and development than anyone else, Mr. Estes.
Thank you, Mr. Chairman. I move to strike the last word. I want to thank you, Mr. Chairman, for keeping this critical markup on the calendar today. I know some people in Washington were calling this weather to be a big snowstorm, but I'm glad we're here talking about policies that are going to help families and small businesses across the country. I want to start out by thanking you, Chairman Smith, for your tireless work with Chairman Wyden over the last 14 months on this bipartisan tax package. You and your staff on the Tax Committee have done a great service for the country, no matter what the Wall Street Journal may have said about this bill. It shouldn't surprise anyone on this committee that one of the policies I'm most excited about is research and development expensing, which is a cornerstone of this tax package. I'd like to thank my colleague, Mr. Larson of Connecticut, for joining me in sponsoring the R&D expensing legislation for the past few Congresses. Without our partnership, I'm sure that this moment would not be possible. Our bill garnered so much bipartisan support, it became the most co-sponsored piece of tax legislation in this Congress. I've shared these stats before, but it's worth talking about them again today. Our main competitor, China, has seen its R&D investments increase by 400% in just 2 decades. While United States' share of global R&D investment in 2019 dropped to 30%, China's share grew to 24%, up from 15% in 2009, a jump of nearly 10 percentage points in 10 years. They achieved this impressive growth by implementing a deduction of up to 200% on eligible R&D investments. And since amortization took effect 2 short years ago, the growth rate of R&D spending has slowed dramatically from 6.6% on average over the previous 5 years to less than 0.5% over the last 12 months. But this doesn't just impact the small businesses across the country, it really affects workers as well. As companies spend far less on R&D, the sector is down by more than 14,000 jobs. 3/4 of research and development spending is on wages and salaries, making R&D amortization primarily a jobs issue. My home state of Kansas is full of pioneers and innovators. We have a drive to invent and invest in new ideas and new technology. We're the air capital of the world because folks like Lloyd Stearman and Olive Ann Beach found our wide open spaces and hard-working spirit conducive to advancing air travel. Kansans today are making advancements in healthcare, agriculture, manufacturing, and tech, just to name a few. It should also be noted that this bill takes a holistic view of the R&D provision. Under this legislation, we allow businesses that operate in U.S. territories to immediately deduct R&D expenses incurred in those jurisdictions. This was especially important as we continue to push back against the OECD and the ill-conceived global minimum tax. Correcting this tax code issue is not just about making the tax code fair for investors and innovators, but it's critical for boosting our economy and making the United States competitive. Each one of us in this room have constituents in our home districts who will benefit from us passing the Tax Relief in American Families and Workers Act, and specifically the R&D expensing. I realize some Americans may not be familiar with the nuances of this part of our tax code, but simply put, Republicans and Democrats agree that this is going to boost our economy and our workforce. I want to again thank Chairman Smith for his work in putting this tax package together. I know in divided government, we can be especially challenging, but consider the facts that one of the key pieces I just discussed is already supported by nearly half of both parties through co-sponsorship. It provides a great starting point for us to bring other tax elements together which will benefit families and workers. It's my hope that this committee will continue to work together, using this bill as an example of working together in a bipartisan, bicameral manner. I believe we can do so on the Financing on Energy Futures Act, which I introduced with Mr. Thompson, the Help Independent Tracks Succeed Act, or HITS Act, which I co-lead with Ms. Sanchez, and with pushing back on OECD's Global Minimum Tax Scheme. The Tax Relief for American Families and Workers Act is a win for Kansans and all Americans. For example, the child tax credit, which was expanded in the Republican Tax Cuts and Jobs Act, is now fully indexed for inflation thanks to this bill. And we know how bad inflation is the last 3 years. And I'm so pleased that our work together on R&D expensing, which is one of the highlights of this bill, and coupled with other tax provisions that will benefit the U.S. economy, small businesses, innovators, families, and everyday Americans. I look forward to voting yes on this legislation. And with that, Mr. Chairman, I yield back the balance of my time.
Thank you. Strong advocate for the child tax credit, low-income housing, Ms. Del Bene.
Thank you, Mr. Chairman. I move to strike the last word. This is an imperfect bill, and it could do more to lift children out of poverty, and I will talk about that more later in this markup. Nevertheless, it includes policies that I've long advocated for that would help build more affordable housing, help support workers, and grow our economy. I led the Affordable Housing Credit Improvement Act with Congressman LaHood, as well as Representatives Beyer, Wenstrup, Panetta, and Tenney, which would strengthen the low-income housing tax credit, or LIHTC, to spur desperately needed production of affordable housing across this country. This bill includes the largest expansion of LIHTC in several decades and will help countless families find a safe and affordable home. The LIHTC expansion in this bill would help build more than 200,000 affordable homes across the country and nearly 7,000 homes in Washington. I'm also pleased that this package includes legislation to reduce double taxation on American and Taiwanese businesses and workers. Taiwan's future is at an inflection point, and we must do all we can to bolster its democracy and reduce its economic dependency on China. This provision will advance those goals by fostering two-way investment and creating even more jobs in the U.S. in critical sectors like semiconductor chip production. In 2022, I met with Taiwanese leaders and saw the strong outpouring of support for the U.S.-Taiwan relationship firsthand. Since then, I've worked with Ranking Member Neal and Representatives Chu, Adrian Smith, and Malliotakis to introduce a resolution in support of a tax deal with Taiwan. I'm glad that we're able to stand united here with the people of Taiwan and advance this important provision. But we can do all of these things and invest in our children, and they should be our priority. I hope we'll work to do just that. Thank you, and I yield back.
Thank you. Mr. Smucker is recognized to strike the last word.
Thank you, Chairman Smith and Ranking Member Neal, for leading the successful negotiations on the tax package that's before us today. We're very grateful for your commitment to the negotiations. And while no bill can avoid criticism, I think that each one of us sitting in this room today recognize that what we're considering today is good policy for the American people and for economic growth. The package before us will help hardworking families who are struggling with higher prices by adding an inflation adjustment to the child tax credit. It also extends job-saving provisions from the TCJA, like allowing for an immediate deduction of research and development costs to ensure that American businesses of all sizes remain competitive and growing. So I'm very proud that our committee will be voting on this today, and also that we're serving as an example that both sides can still come together to find common ground and agree on policies that mutually benefit American families and keep our economy thriving. Sadly, that's become all too rare. What's also rare is that this package is fully paid for by cutting down the potential for fraudulent claims of the ERC, or the Employee Retention Credit. We all know how important the Employee Retention Credit has been for keeping our constituents employed throughout the pandemic, but we've also seen how criminals have abused the credit to file fraudulent claims costing taxpayers billions of dollars. Fraudulent claims are exacerbating the backlog for processing legitimate claims, and many of my constituents with legitimate claims still are awaiting relief. The responsible guardrails written into this bill will ensure that every legitimate ERTC claim filed before January 31st of 2024 will be paid, as they should be. The tax code impacts everyone's lives, which is why it's such an honor to serve as a member of this committee. I look forward to building on today's bipartisan work as we head into tax reform in 2025. It's worth highlighting that much of that work is already underway. Each of us sitting here today are co-leading bills with our partners across the aisle. For example, I'm proud to be partnering with my Democrat colleagues on several provisions, including making Section 199A pass-through deduction permanent, strengthening the Work Opportunity Tax Credit, enhancing retirement security for all Americans, increasing opportunities for apprenticeship training and upskilling, and addressing unfair tax treatment for survivors of sexual abuse. So I look forward not only to supporting this bill today, but also working to get some of these other the bills that we're working on included in the next tax package that comes before this committee. Again, thank you, Chairman Smith, Ranking Member Neal, for your leadership. I look forward to advancing this bill out of committee, encourage all my colleagues in Congress to support this package when it reaches the House floor. I yield back.
Thank you. Mrs. Chu, you're recognized.
I move to strike the last word. In 2021, Democrats designed an expanded child tax credit that accomplished something truly incredible, cutting child poverty in half. And that means that we have the formula for solving child poverty in our country. We must make permanent a fully refundable monthly enhanced CTC that reaches every child in America, including those in the families with the lowest incomes. Democrats have been fighting for this since the expanded CTC expired, during which time child poverty returned to its pre-2021 levels. These are more than just statistics. Each number represents a child whose material conditions have worsened and whose long-term outcomes will be negatively impacted because Republicans refuse to support extending the American Rescue Plan's CTC. We must be clear-eyed that this legislation that we're considering today goes only part of the way, and much more work remains to be done. While I am disappointed in this missed opportunity, I'm encouraged that the bill includes an expansion of the CTC that will help lift almost 500,000 children out of poverty and increases benefits for 16 million children in low-income families. Consider an example from the Center for Budget and Policy Priorities. A single parent with 2 children who earn just $13,000 per year receive a credit of $1,575 today. But under this proposal, this parent's credit would double to $3,150. These are life-changing figures for some of the families who need it the most. These families deserve this relief and more, so while this bill is imperfect, it will help them tremendously. I also acknowledge that the corporate tax deductions expire in 2025, so we will actually be returning in 2025 to fight for a more generous child tax credit and to ensure that corporations pay their fair share. The bill before us also includes significant bipartisan provisions like enhancements to the low-income housing tax credits that will create more affordable housing units in high-cost areas like my district in Southern California. In fact, these provisions could help California build as many as 15,000 new affordable rental units each year. And I am thrilled that this bill includes the U.S.-Taiwan Expedited Double Tax Relief Act, which I was proud to work on with the chairman and ranking member and with Representatives Del Bene, Adrian Smith, and Maliotakis. Taiwan is the only one of our top 10 trading partners with whom we lack an income tax agreement, and without it, we will not be able to take full advantage of increased investment. This is a worthy goal because Taiwan is a leading democracy in Asia that just completed a free and fair election And because their investment in the U.S. supports at least 188,000 American jobs, many of those jobs are in my district in Southern California, home to one of the largest communities of people from Taiwan in the U.S. Last year, some of them met with me to tell stories of huge tax bills when doing businesses in both markets and having to curtail their cross-border investment. In fact, the American Institute in Taiwan surveyed Taiwanese companies with a presence here in the U.S., and 79% reported that double taxation of income is a considerable factor that prevents them from investing more here. From major chip companies to small businesses in Southern California and across the country, it's clear that mitigating double taxation between the U.S. and Taiwan is crucial. And it will only become more important as Congress and the Biden-Harris administration continue working in a bipartisan manner to strengthen our economic relations with Taiwan, which is why I've called for a comprehensive bilateral trade agreement with Taiwan. To unlock the benefits made possible by our strengthening partnership, we must ensure that businesses are not at a competitive disadvantage. For these reasons, I plan to support the legislation before us today, and I look forward to continue to fight for a stronger child tax credit and to ensure that corporations pay their fair share in taxes. I yield back.
Thank you, Ms. Miller. You recognize.
Thank you, Mr. Chairman. I move to strike the last word. And I want to thank Chairman Smith for his determination and tenacity, which has led us to voting on the Tax Relief for American Families and Workers Act today. Without your leadership, I know that we would not be in the position to vote to supercharge our economy and to support our working families who need help the most. I strongly support the extension of key policies of the extremely effective Tax Cuts and Jobs Act passed under President Trump's leadership in 2017. The TCJA overperformed economist expectations and set up the U.S. economy to successfully weather the storm of COVID-19. Since then, out-of-control Democrat spending has put our economy in a precarious position, and it is essential for us today to pass this bill to give businesses the boost they need to employ an additional 1 million Americans and right our economic ship. I look forward to building on President Trump's success from the Tax Cuts and Jobs Act during his second term next year. I also applaud your efforts to ensure the child tax credit returns to the roots that President Reagan envisioned. When he developed the CTC, supporting families is absolutely a conservative policy, and I support the needed updates in this bill to ensure American workers who were hit the hardest by Democrat-caused inflation, that they get the support they so desperately need from the federal government. I look forward to passing the Tax Relief for American Families and Workers Act today and urge all of my colleagues to vote in favor of this important legislation. This is just the start of our work on making the tax code work better for the American people, and I look forward to working across the aisle and with you, Mr. Chairman, to focus our committee on several other tax priorities that are essential to West Virginia and the rest of the country. One key priority our committee must take up is the need to stop the Chinese Communist Party from soaking up the American tax dollars through the Advanced Manufacturing and Electric Vehicle Tax Credit. Although I strongly disagreed with many portions of the misnamed Inflation Reduction Act, I don't think it was anyone's goal to send hundreds of billions of taxpayer dollars to communist Chinese companies. This must be stopped before it's too late. I would also urge the committee to consider working on bipartisan solutions to help rural communities. Congresswoman Sewell and I have worked together to introduce two pieces of legislation to do just that, the Rural Jobs Act and Methane Reduction and Economic Growth Act. The Rural Jobs Act would ensure the new markets tax credits work for rural communities, and I am honored to work to shepherd a bill you previously led, Mr. Chairman, into law. The Methane Reduction and Economic Growth Act represents the single largest economic opportunity in West Virginia, and through a simple technical correction to the 45Q tax credit would unlock billions of dollars in economic development in West Virginia as well as many other energy-producing states. Passing this bill would be the biggest economic boom we've seen since God himself placed coal in mountains. I would be remiss to not mention my disappointment in the IRS's decision to illegally delay the 1099K threshold unilaterally. This negated our opportunity to pass a lasting fix to another problem created in the Democrat American Rescue Plan and leaves nearly 50 million Americans in danger of receiving tax forms they don't deserve and certainly don't expect. I look forward to our upcoming opportunity to question Commissioner Werfel on this decision in the coming weeks. These policies and other bipartisan initiatives like fixing LIFO, incentivizing and helping home ownership, repealing bad Obamacare-era policies, hurting women-owned small businesses should all be considered expeditiously by this committee and then sent to the Senate. I thank you again for your leadership, Chairman, and I yield back my time.
Thank you. Ms. Moore, you recognize.
Thank you so very much, Mr. Chairman. I move to strike the last word. I just want to thank the chairman and this committee for this markup, but I do have to say that I think that marking these bills up today is a missed opportunity on both the individual and the corporate side. You've heard many of my colleagues talk today about the $600 billion plus that we are going to lock in for corporations, but yet leave millions of children languishing in poverty. You know, I've heard many people say that that the improvements in the child tax credit is something that we ought to just be happy with, because it will, in fact, provide at least 400,000 kids, will move them out of poverty. But it's unacceptable to me that we are leaving millions more in poverty. I'm so proud that what we did with the child tax credit, the refundability portion, lifted 40% of children in this country out of poverty. You know, the Republicans' notion that somehow there's a moral hazard in providing a refundable tax credit is unsubstantiated by people who do research. This is not a disincentive to work. And if you heard the dialogue that I had with the Joint Committee on Taxation, that no matter how hard a woman works, say she's got 2 kids, no matter how hard she works, she'd have to work 70 hours a week under current law and over 40 hours a week in order to access the maximum credit. And so this is not supposed to be a work program. It's supposed to recognize the expensive cost of raising kids and wanting them to have the proper development, health and education and employment. That is what is a fact. It's a fact that children are better off with some support. And speaking of a work program that incentivizes work, the Earned Income Tax Credit. We didn't do a thing to improve it. We tax single people into poverty. We discriminate against younger people and older people, and we have done nothing to fix that. And you know, I just want to talk a little bit about the business portions of this bill. Take, for example, the Tax Cut and Jobs Act, which was passed in 2017. And it was rushed, and so there were a lot of mistakes made. Representative Ferguson and I are working on a major flaw. The downward attribution flaw wasn't addressed in this bill. Another unintended consequence to the TCGA hurts municipal bond insurance and reinsurance, which helps defray the risk of investing and helping borrowing costs, keeping them low. And I'm working with Representative Adrian Smith to fix this. You know, they say, there are other things, like I appreciate the improvements that have been made to the low-income housing tax credit, but it doesn't help tribal communities at all. And of course, we have a trust obligation with them that we are not meeting. This doesn't have to be a take it or leave it proposition, Mr. Chairman, and I'm talking to the chairman of the full committee. This committee print that we're considering today is not there yet. I definitely want to work with you to come up with something better. You can't always get what you want. You can't always get what you want, but if you try sometime, y'all help me. You can get what you need. And so let's just get there. And I yield back.
Thank you. Dr. Murphy, you're recognized.
In the interest that I hope my Democratic colleagues will follow, I will remove my ability to speak, and the same would go with amendments. Thank you, Mr. Chairman.
I don't think it's going to work.
Mr. Kildee, you're recognized.
Thank you, Mr. Chairman. I've long said, as long as I've been on this committee, that we need to make our tax code more simple, more fair, and especially focused on working families. Working families ought to be the focus, helping everyday people find those good-paying jobs, giving them a leg up so they can provide for their families, pay their mortgages, their rent, and save for a secure retirement. In 2021, thanks to Democrats and President Biden, Congress began to focus on those workers, on seniors, and on families with children. We boosted the child tax credit, giving from $2,000 to $3,000, and made that credit immediate, providing vital monthly payments for families with young children under the age of 6. That expanded child tax credit was a vital lifeline for millions of Americans, and the most significant action Congress took to make our tax code work for working families, not just the richest Americans and the biggest corporations. The result of that work was transformative. We cut child poverty in half. Unlike the Republican-passed tax bill in 2017, our legislation gave benefits to working people, not billionaires and those who don't need another tax cut. Yet, in 2021, every Republican in Congress voted against expanding the child tax credit. I'm also disappointed that this legislation does not extend the health coverage tax credit, or the HCTC. All Americans deserve access to affordable quality health care, and it's especially true if you worked hard but you lost your job or your pension through no fault of your own. The HCTC was created to help workers and retirees in these very difficult positions to just simply cover the cost of health care. Tens of thousands of Americans rely on HCTC, including many Delphi salaried retirees who saw their pensions unfairly cut when they were taken over by the Pension Benefit Guaranty Corporation. But the HCTC expired in December of 2021. So since then, Americans who rely on this tax cut have had little certainty on how to plan financially to cover their health care insurance costs. These workers need and deserve our support. I've introduced legislation and worked with Republicans, including Republicans on this committee, along with fellow Democrats, on extending this critical tax credit for workers, and I wish that it had been included in this bill. The legislation that we're considering is not perfect. It's not the bill I would have written myself. However, it clearly represents a bipartisan compromise, and while it does not include everything that I would have liked, it does make some significant progress to help working families with children and help lower housing costs for those people I represent back home in Michigan. By providing targeted tax relief to working families and middle-class families, we can help them take care of their children and make buying a home more affordable, a really important provision in this legislation. Nearly 500,000 Michiganders will benefit. Let's be clear, while this bill represents progress, we should not celebrate a mission accomplished moment. There is still much more work to be done to help working families. I'm proud today and every day to work with Ranking Member Neal and House Democrats who I know made this bill better by fighting and prioritizing tax relief for working people. And for those reasons, I do plan to vote yes. I would say to Mr. Chairman Smith, I would like to continue working with him and Ranking Member Neal to pass other tax relief, including reauthorizing the health coverage tax credit in a way that we can get it done. I appreciate the opportunity to speak, and I yield back.
Thank you. Mr. Kustoff is recognized to strike the last word.
I move to strike the last word. Mr. Chairman, thank you very much for all of your hard work on this bill and providing the markup today, your work with Senator Wyden and with the ranking member. I think we all know that today American families have a tough time. When I meet with my constituents back home, probably like all of you, we hear the same concerns over and over again. Everything's more expensive. Businesses, especially small businesses, have trouble finding enough workers. And of course, the cost of borrowing is really high today. People today are worried about their financial security and about their future, and that's why it's important that Congress should act now. This bill, the Tax Relief for American Families and Workers Act, will provide workers and families with the support that they need to get our economy on track. Specifically, this bill does three important things that are pro-growth: business depreciation, business interest deductibility, and immediate expensing for research and development costs are all addressed in this legislation. These policies, they are tools that help businesses, and especially small businesses, grow, hire workers, and invest in their communities. Since the enactment of the Tax Cuts and Jobs Act of 2017, bonus depreciation has helped lower the cost of capital for thousands of businesses across the country, leading to more jobs, higher wages, and increased productivity. Interest deductibility protects American jobs and keeps manufacturing from going overseas. And immediate expensing for research and development costs help maintain America's status as the innovation capital of the world and leads to more investment, more jobs, and more economic growth. Expanding these policies will ensure our tax code remains competitive and that businesses will continue investing in their workers and their future. The Tax Relief for American Families and Workers Act is undoubtedly pro-growth, it's pro-business, and it's a pro-family bill. A vote for this bill is a vote for jobs, for economic growth, and for financial security for millions of Americans. I urge my colleagues to stand with American workers and pass this bipartisan, common sense bill that will get our economy back on track. And finally, I think it's also important that this committee send this bill to the floor of the House of Representatives with a good, strong bipartisan vote. That'll send a signal to the full body, the full House of Representatives, and to the American people. And with that, Mr. Chairman, I yield back.
Mr. Byers recognized to strike the last word.
Mr. Chairman, thank you very much. Politics is the art of the possible. This bill is the result of painstaking negotiation and compromise that will deliver real benefits to our constituents, which is commendable given the partisanship and the divisiveness that typically defines so much of our work in Congress these days. The expansion of the child tax credit in this measure will lift as many as 400,000 children out of poverty in the first year, and about 16 million children and families with low incomes will benefit, including nearly 3 million children under the age of 3. And it sets the stage for further progress in 2025 and in the years to come. We know we can do more because we did it in the last Congress with the American Rescue Plan, when under Democratic leadership, along with their economic impact payments and enhanced unemployment benefits, we cut the child tax rate in half. This is a lost opportunity, but let's face it, we do not have the majority right now. While this bill does not get us back to full refundability or the monthly advance payments, it still represents a significant step forward in reducing child poverty. And yes, we can and should continue to fight for these provisions in the months and years ahead
to ensure that all families with children excluded from the full value of the CTC are given the resources to succeed. But other major provision wins in the bill are the improvements to the low-income housing tax credit, which will be 200,000 affordable housing units, new units across the country. This is a true public policy success story, and it's been responsible for the financing of over almost 4 million affordable homes in rural, suburban, and urban areas since 1986. The credit has a long tradition of bipartisan support, and I'm proud to see that this legacy continues in this Congress with champions in both parties in this committee, especially Susan DelBene, Darren LaHood, Brad Wenstrup, Claudia Tenney, and Jimmy Panetta. Their leadership was critical in getting the LIHTC expansion into this bill, and I want to thank them greatly for their efforts. This bill will go some distance towards helping working families as our economy continues to recover from the economic effects of the pandemic. I hope we can build on this. History is not over. Thank you, and I yield back.
Mr. Stube is recognized to strike the last word, the leader on the disaster tax provisions in this bill.
Thank you, Mr. Chairman. Today, the members of this committee have an opportunity to deliver real, tangible tax relief to American families and small businesses, specifically Americans who have faced extreme hardship due to damage from federally declared disasters will get the relief that they deserve from this bill. I want to thank Chairman Smith for including H.R. 5863, the Federal Disaster Tax Relief Act, in this package. H.R. 5863 passed out of this committee unanimously in November of last year. It has garnered significant bipartisan support with 35 co-sponsors, including 19 Republicans and 16 Democrats from 21 different states. This committee knows what is at stake for our constituents, and I'm hopeful that we can finally pass this important provision into law as part of this tax package. On September 28, 2022, my district in Southwest Florida was devastated by Hurricane Ian, one of the most damaging hurricanes to ever hit our country. Tragically, the storm claimed the lives of nearly 150 people. According to the National Oceanic and Atmospheric Administration, Hurricane Ian was the third costliest hurricane in American history and the most expensive to ever hit Florida. It totaled over $112 billion in damages. Over 15 months after this devastating storm, my constituents are still working towards rebuilding their lives. I've received thousands of letters, calls, and pleas for help from people in my district, many of whom have incurred tens of thousands of dollars in recoverable expenses. After all this time, they are still waiting on Congress to do its job from providing the relief they need and deserve. Disaster relief through changes to tax policy has been a very common congressional response to disasters. We have passed disaster-related tax relief on 8 separate occasions going back to 2002. It's not just Hurricane Ian victims who will benefit from this tax relief, though. Millions of Americans around the country who, through no fault of their own, were victims of federally declared disasters will be eligible for the same tax relief. These provisions include bipartisan disaster priorities from victims of wildfires and chemical spills that have affected millions of Americans over the past several years. For Floridians, we know that the recovery from Hurricane Ian is far from over. Floridians are resilient, and we will come out of this better than ever. However, it's long past time for Congress to do its job and provide the same disaster relief that we routinely provide after these disasters. I've been working tirelessly on disaster relief legislation and will continue to do whatever it is within my power as a member of Congress as long as it takes for Floridians to receive the relief that they deserve. This is not a Democrat issue or a Republican issue, and I'd like to thank Congressman Panetta and Congressman Thompson on this committee for their support of the disaster relief bill. Our constituents are in need of help, and today we can move one step closer to providing real relief to Americans from every corner of this great nation. As with any compromise legislation in Congress, not all of us will love every aspect of the bill. I'm sure we all have different items that we would like to see included or taken out. However, the tax package before us today provides real tax relief that will truly improve the lives of our constituents. Thank you, and I yield back.
Mr. Schneider is recognized to strike the last word.
Thank you, Mr. Chairman, and I move to strike the last word. Thank you. I want to thank my colleagues for staying over today while the rest of the House fled the snow yesterday. I'll try to keep my remarks short so we can complete our work as expeditiously as possible. We are here because the committee does uniquely important work that has a big impact on American families and American companies. And we are here today working in a bipartisan fashion that I think the vast majority of Americans want to see more of. It is critical we approach our work here with the prudence and seriousness with which it merits. I wish this bill was more robust in supporting American families, and in particular, American children living in poverty. and I look forward to trying to improve it when we consider amendments. In the last Congress, the American Rescue Plan and the provisions crafted by this committee strengthened the child tax credit and helped reduce child poverty by 50% in a single year. I've heard from more constituents than I can count about the impact the enhanced CTC had to pay for children's food and basic needs, to pay for daycare so that a parent could go back to work, or to put towards their children's tutoring or their kids' college savings fund. What we are working on today, extending the enhanced child tax credit as well as the R&D tax credit, should have and could have been achieved last year or even in 2022, and would have been if not for the unfortunate partisan posturing. The legislation we're marking up today is a half step. It would help lift thousands of kids in Illinois and nearly 500,000 kids around the country out of poverty, and it would benefit ultimately more than 16 million children nationwide. But I believe the child tax credit could also be fully refundable, and should be, as we provided with the American Rescue Plan. And by making it fully advanceable, young children and young families would be able to count on the reliability of cash flow each month. And as we all agree here today, both our families and the companies where their parents work need long-term certainty rather than the temporary extension included in this bill. We know these policies work. We have clear data that shows how dramatically both the child tax credit reduces childhood poverty and the R&D investment drives innovation. We need to make these policies permanent. I'm also grateful this legislation expands affordable housing by boosting policies under the low-income housing tax credit. I regularly hear from my constituents concerned about the lack of affordable housing options in our state, and this bill makes sensible, responsible improvements to LIHTC. This should result in the addition of over 200,000 units of housing in the coming years. As well, I'm happy to see the inclusion of bipartisan legislation I helped introduce with my colleague Adrian Smith to protect the interest deduction for businesses tapping into a line of credit. And finally, I have to say, I am deeply disappointed that this legislation does not address the disparity and double taxation that thousands of families in my district and states like Illinois incur because of the cap on the state and local tax or SALT deduction. We need to restore the full SALT deduction. I know that many of my colleagues on the other side of the aisle agree, and it's unfortunate that their voices have once again been silenced in this tax bill. Finally, let me again commend the chairman for reaching out and working with Democrats to bring this bill forward and highlight that we can accomplish good things for the American people when we work together. I pray we can see more days like today where we find common ground, maybe without the snow. I may not get everything I think I want or need to be included in this bill, but helping American families, lifting American children out of poverty, helping American companies grow our economy are things we can all support and all agree that we need to do more of in the future. Thank you, and I yield back.
Ms. Tinney is recognized to strike the last word.
Thank you, Mr. Chairman. I move to strike the last word. And I just want to say thank you to the chairman, to the ranking member for making this possible today. And though I do agree with my colleague on the other side of the aisle, Ms. Moore, that you can't always get what you want, it's better that we don't quote the Caddyshack judge who said, "You'll get nothing and like it." So we had to give up a little bit of everything here, so I think all of us ended up with something that is a good package that our colleagues will support on the floor. And I am supportive of this package. Not perfect, I don't get everything we want, but H.R. 2074, the Tax Relief for American Families and Workers Act, is a comprehensive package that is going to preserve so many things that were great in the Tax Cuts and Jobs Act that really helped our economy, especially in upstate New York. It's going to have an extremely meaningful impact on my constituents in New York District 24. It's going to help hardworking families, manufacturers, multi-generational family farms, which are critical to my district. This package will also have wide-ranging benefits to so many New Yorkers who are suffering under soaring costs, rising taxes, and regulatory expansion. I'm a longtime business owner and a former newspaper owner, so I'm grateful for many of the provisions in here. Particularly, I'm really pleased that I was able to work with Representative Del Bene on the Community News and Small Business Support Act to help introduce and establish tax incentives to help support local news organizations. They're critical to our local communities. Also grateful to be able to work on the New Markets Tax Credit Extension Act with Representative Sewell to make this permanent. This is something we'll continue to work on. It's going to be a huge win for my district. A recent New Markets Tax Credit investment in my district will support a partnership between GLOW YMCA and United Memorial Medical Center in Batavia, New York, and will create nearly 400 jobs. These are critical assets that we need in our small rural communities in upstate. Also, really excited to partner with my colleagues, sad to see him go, Representative Higgins, the Saving Our Malls Act, which I've introduced with him as well. That will help our commercial real estate industry up in upstate New York. Also, the Technology for Energy Security Act, which I introduced with Representative Panetta to extend the investment tax credit for qualified fuel cells until January 1, 2033. The 30% tax credit, which is set to expire next year, has been an important pillar in promoting domestic development of stationary fuel cells in America, supporting thousands of jobs in the United States. And this is also a key component of securing American energy independence, reducing our dependence on foreign adversaries around the world, especially China. Also want to join with my colleague, Representative Kildee, and thank you so much for your great advocacy and work on helping the Delphi salaried employees. We're never going to quit on this. We're going to make sure that they get their justice at some point. Unfortunately, not in here. Also, just wanted to thank Mr. Byer and others, especially Mr. LaHood, for spearheading the low-income housing tax credit. It's a critical element for my district as well. And I'm just grateful to all my colleagues for being able to get so many great elements, not everything, but in this bill. And Mr. Chairman, I just want to say again, I'm grateful for your work on this. I know you've been working for months and months with Senator Wyden and your staff and everyone in the Ways and Means Committee coming together in a bipartisan way to put forth this bill, and look forward to moving this forward in the House and Senate and getting them signed into law to protect our communities. Thank you, and I yield back.
Thank you. Mr. Panetta is recognized to strike the last word.
Thank you, Mr. Chairman. I move to strike the last word. The bipartisan legislation before us is good for my constituents in California's 19th Congressional District. But we did miss out on a chance for it to be a little bit better. I think we all understand that, and we've heard that today. We could do more to reduce child poverty with full refundability and direct monthly payments. We could do more to expand housing for middle-income families, workforce housing, so that people who work in my district and our districts can actually live in our districts. And we could do more to give certainty to our clean energy industry, as we just heard from my colleague, Representative Tinney. Unfortunately, those and other priorities were left out. But this is a good bipartisan bill, and it will affect the lives of my constituents in the 19th Congressional District. First and foremost, the child tax credit expansion is real and meaningful, lifting hundreds of thousands of children out of poverty and increasing benefits for millions of children this year alone, which are both something to build on. Given the housing challenges in my district, and thanks to the leadership of Representative Del Bene and Representative LaHood, we've been championing the expansion of the low-income housing tax credit. The increase of that credit and lowering the bond financing test is likely to be the largest increase in affordable housing in over 20 years. For a district like mine, where housing is the #1 issue, this legislation to achieve those goals is very, very impactful. My state is still recovering from wildfires and floods. This bill makes it easier to receive casualty loss deductions by making sure payments are tax-free, and I want to thank Representative Stubbe and Representative Thompson for their leadership on that bill. The R&D amortization will literally save small businesses in my district from either having to take out personal loans to cover their tax payments or consider closing for good. And lastly, I appreciate that this bill is paid for and applaud the effort to make this package fiscally responsible. So this is a good piece of bipartisan legislation, and I do commend Chairman Smith, Chairman Wyden, and Ranking Member Neal for working together on this package. It's not perfect, we understand that, but it's a compromise package, and this is how it works in a divided Congress. It's not perfect, but neither is governing. But that's our job, especially when we govern for our constituents, like we're doing with the passage of H.R. 7024. I yield back.
Thank you. Ms. Van Dyne is recognized to strike the last word.
Thank you very much, Mr. Chairman. And thank you for your leadership in negotiating this legislation, which is so important for America's families, workers, and job creators. I'd like to echo the sentiments of my colleagues who have already highlighted the significance of this legislation, particularly when it comes to expired provisions for full and immediate expensing for research and development, full expensing of investments in new equipment, machinery, and technology, and business interest deductibility, which makes it easier for small businesses to access capital. Getting this legislation to this point was no easy feat. If we fail to pass it, our families will keep less money in their pockets, Small businesses will continue to be strangled by red tape. Our tax code will be less competitive, and we could delay or prevent the next great life-saving invention. Our work does not stop here today. There is much more that this committee can and will do. I look forward to working with the chairman to pass more bipartisan legislation, including several priorities I've spearheaded, such as the bipartisan legislation introduced by my colleague from Wisconsin on permanent tax relief for dyed fuel, my legislation that would prevent the Chinese Communist Party from purchasing American farmland, and the Supply Chain Disruptions Relief Act, which would help lower car costs and support auto dealers who have suffered from supply chain disruptions. This committee also has lots of work to do when it comes to fixing many of the disastrous policies to come out of the so-called Inflation Reduction Act, including my legislation to repeal the overbearing chemical superfund tax, which is included in today's legislation. We must also continue our oversight when it comes to the IRS. Last Congress, Democrats' IRA grew the IRS significantly, yet we continue to see these bureaucrats work less and yet somehow impose a bigger burden on the American people. I will appreciate the chairman's efforts to bring Commissioner Werfel in front of this committee and to receive answers to the many questions and concerns our constituents have raised about problems at the IRS, including a flawed misinterpretation of the 1099-K tax provision and the continued problems with the Employee Retention Credit. The Tax Relief for American Families and Workers Act will mark the beginning of the end for claims of the ERC, but the IRS still has much work to do, including addressing the more than 1 million backlog claims, including those of my constituents who have been waiting for over 3 years. The IRS must ensure taxpayers receive these claims they are owed and were promised. And we also know that there are fraudulent claims out there. As I highlighted last year during a hearing on this topic, I continue to receive calls myself from these fraudulent mills claiming I am eligible for this tax deduction. I can assure you, Congress is very, very far from being a small business. But the IRS and Congress must ensure that those fraudsters are held accountable and as much of those stolen dollars are retrieved. I support this legislation, and I urge all of my colleagues to do so as well, and yield back.
Thank you. Are there additional members that wish to strike the last word? Seeing none, we will move to amendments. Are there any amendments to the amendment in the nature of a substitute? Ms. Del Bene.
Mr. Chairman, I have an amendment at the desk.
Mr. Chairman, I reserve a point of order.
A point of order has been reserved. The clerk will distribute the amendment, and I ask the gentle lady to suspend while the clerk distributes. The gentlelady is recognized for 5 minutes.
Thank you, Mr. Chairman. I offer this amendment on behalf of myself and nearly every Democrat on this committee. The Child Tax Credit, or CTC policy, as written in this bill, does not reach families who need it the most. For example, a single parent with 1 child would need to earn $22,900 a year to get the full child tax credit. That means someone making the federal minimum wage and working full-time, approximately $15,000 a year, would not earn enough to receive the full credit. And yet, a single parent making $200,000 a year or a family making $400,000 a year receives the full $2,000 credit. My amendment corrects this stark disparity by making the credit fully refundable, so the single parent earning minimum wage gets the same amount as the single parent making $200,000 a year. While improvements have been made to the child tax credit in this bill, it still leaves behind more than 1 million kids in families who earn too little to earn the full credit and those that need it the most. My amendment will significantly improve the underlying bill by including the expansion of the child tax credit that we enacted in the American Rescue Plan in 2021. This amendment would make the child tax credit fully refundable, paid monthly, and increase the credit amount to $3,000 and $100 per year for kids under 6, meaning that families with children will receive monthly checks of up to $300 per child. We saw this policy have a transformative effect on child poverty when it was enacted as part of the American Rescue Plan in 2021. I helped lead that effort to expand the CTC along with Representatives DeLauro and Torres. It cut child poverty in half, reached more than 65 million kids, and lifted nearly 4 million children out of poverty in just 1 year. By increasing the amount of the credit, delivering it monthly, and ensuring the full credit reaches the families who need it the most, parents were better able to afford food, housing, and meet other basic needs. For over a year, my Republican colleagues refused to act to restore the enhanced child tax credit, and in that time, we saw poverty among children more than double. This really has proven beyond any doubt that the reduction in child poverty we saw before was a direct result of the expanded credit. We have an opportunity for the members of this committee to show our support for a policy that is proven to lift millions of children out of poverty. It works. We have tons of data to show the impact it has had. Mr. Chairman, I know we've had many back and forths about your support for the child tax credit, and today I offer the solution that can put our kids on the best path forward. Passing my amendment will help ensure that this bill has the bipartisan support it will need to pass on the House floor, and I urge my colleagues to vote yes. I yield back.
Is there anyone else to speak on the amendment? Ms. Van Dyne is recognized.
Thank you very much, Mr. Chairman. First, can we correct the record? Republicans have long supported the child tax credit. CTC was created with Republican votes, and it was only Republican votes that doubled the credit from $1,000 to $2,000 in 2017. That version of the child tax credit is a powerful pro-family work incentive. In 2021, Democrats went a different direction with the child tax credit, which concerned Republicans and contributed to the labor shortages that we heard about in committee field hearings last year. This bill includes CTC changes that both parties can support, including an inflation adjustment and a repeal of an existing penalty for large families. With a divided control of government and Congress, bipartisan, bicameral negotiations are the only way to achieve success on tax legislation. And in that type of bipartisan agreement, no one is going to get everything that they want. We have an opportunity here to do something significant today. Advance legislation that helps families, workers, and small businesses, and that can get approval in both chambers of Congress. Voting against this bill will not help hardworking families. It will not add jobs, and it will not create opportunities or prosperity. Thank you, and I yield back.
Thank you. Mr. Neal is recognized.
Thank you, Mr. Chairman. I want to suggest that Ms. Delbenny's amendment is superb. The evidence of what happened with the American Rescue Package that came from this committee not only reduced childhood poverty, but it contributed significantly to the fact that is indisputable at this moment, and that is how the American economy rebounded in comparison and contrast to the rest of the world in the midst of the pandemic. So here we are this morning with a 3.6% unemployment rate, labor participation rates up, even productivity up. Much of that impetus at the beginning was bipartisan in this committee, including the CARES Act. And then it did come down on the Democratic side with the subsequent legislation that came from this committee, which repaired the economy. As the primary author in the rescue package of the child credit expansion, I, along with our colleagues, knew exactly what we were doing here, and that was the issue of cash flow. When we sought advice on how to proceed, we did not limit our advice or the advisories that came just from Democrats of national stature in terms of economics. We sought Republican input. Those Republicans all came down on the same side as the Democratic advisors we had, and that was to make sure there was cash flow in the hands of the people at the lowest end of the American economic spectrum. So retracing what we did with the American Rescue Package and getting the money out the door, there's another consequence. We used the credit unions, CDFIs, and community bankers for credit histories. When those individuals could not be traced because of how low their incomes were, what did we do? We didn't take no for an answer. We went back and tracked Medicaid records. And in tracking the Medicaid records, we discovered those who were in need of that cash assistance. So we can take, again, satisfaction from what we did in an assertive manner to repair the American economy. From March 2020 to April of 2020, 22 million jobs were eliminated. Every one of those jobs have come back. Plus, there are 8.5 million Americans jobs right now awaiting applications from the American family. We should take great pride in what the committee did at the beginning on a bipartisan basis. I know Secretary Mnuchin and I and Speaker Pelosi, day after day, came to the same conclusions, and he relied upon the same people that we relied upon for that advice. This is a chance to have this package approved unanimously in the committee. This is a really good amendment that speaks to not just Democrats, but evangelicals who sought me out the last time around in support of what we were doing. Childhood poverty should not be lifetime condemnation to poverty. And this is a chance for us to expand the credit. And by the way, I know there's sentiment on the other side for improving the credit and making it refundable. It's a big deal for Democrats, in totality, a small ask. Thank you, Mr. Chairman.
Thank you. Mr. Davis is recognized.
Thank you, Mr. Chairman, and I simply want to commend Representative Del Benet on her continuous work on this issue, strongly support her amendment, associate myself with the comments that she made on introduction as well as those of Ranking Member Neal, urge its passage, and yield back the balance of my time.
Mr. Blumenauer.
Thank you, Mr. Chairman. And I appreciate our colleague, Ms. Dubeny, focusing on this and urging us to raise our sights. I'm not particularly interested in rehashing the history. There are fingerprints on the child tax credit from a variety of people. That is a positive aspect. But we have an opportunity now to do it right and do it better, not be chained to outmoded debate. This will make a huge difference for America's children and America's family. It will strengthen the economy, and it is one of those rare opportunities where we all could come together. We, at various points in the past, have supported aspects of this. Being able to do it right, I think, is an amazing opportunity. The costs are modest compared to the benefits for a whole generation of young people and families. It cuts through so much bureaucratic red tape in terms of being able to deliver benefits to people who need it the most. One of the things that troubles me about this package is that it lavishes support on those who need it the least, when we have an opportunity to refocus part of the package on those who need it the most. America's struggling families, particularly low and no income people. So I hope that as we kind of get this out of our system, talk about it a little more, that we can focus on a rare opportunity for a win for the American public that all of us can take pride in. I appreciate again my friend Ms. Delbenny's dogged pursuit of trying to do this right. I appreciate it very much, and I plan on supporting this amendment. Thank you very much.
Ms. Sewell's recognized.
Thank you, Mr. Chairman. I, too, support this amendment. You know, I started today in my striking the last word to talking about my district. You know, it's my home district. I grew up in this district. It's the poorest district in the state of Alabama. Median income for a family of 4 is $30,000. But the people that I represent are not asking for a handout. They're willing to work. They're willing to do the sacrifices, to make the sacrifices necessary for their children to have a better life. but they do need help. I know what's possible for my district with resources and opportunities. You get a person like me with resources and opportunities. And the fact of the matter is, by making the child tax credit fully refundable, you're catching everyone. When you don't have it fully refundable, the poorest of poor cannot take advantage of it. That's why it's so important that we make it fully refundable. You know, 2021, I was in the Piggly Wiggly, and I got approached by a constituent. That constituent had not filed taxes prior to the CTC becoming fully refundable. That constituent had 4 children. That constituent literally could not work because she was the sole provider and the sole caretaker for her 4 children. She came up to me in tears because she finally had an opportunity on a monthly basis to get the resources she needed, not only to provide for her children, but giving her the ability to have child care and to be able to go back to work. I say that because I know that this committee has the power to make this CTC, the child tax credit, fully refundable. We can increase it like we did in 2021, make it fully refundable, and give the money on a monthly basis. And we will save lives. We will be providing for people the least of these. And it's the right thing to do. I am totally in favor of R&D, research and development, and the bonus depreciation and the immediate expensing. I understand how important that is as well. Here's an opportunity for us to do both. Both provide for our small businesses and for our working families and for the poorest of the poor Americans who need our help most. I yield the rest of my time to the gentlewoman from Washington, Ms. Del Bene.
Thank you, Ms. Sewell. I just wanted to highlight that the expanded child tax credit in the American Rescue Plan actually allowed parents to go back to work because they could use the monthly payments to help pay for things like childcare. In fact, there's no evidence that the expanded child tax credit had negative employment effects, and we also have data from around the world where similar child benefits in other countries have shown the same. And then I also, we learned in the Tax Cuts and Jobs Act, a child tax credit still left behind a third of kids and families who earn too little to earn the full credit. And that was in rural areas, young families that were impacted. We learned when we did the American Rescue Plan and we included those families in the credit that we saw one of the largest middle-class tax cuts in history and the largest drop in child poverty on record. So we know we have lots of data on this. We've actually done the experiment and seen what works, and we can do it again. So I urge folks to support this. I yield back.
Thank you, Mr. Doggett. Oh, he's not here. Ms. Chu.
He's always here.
I rise in strong support of this amendment, which would greatly improve the child tax credit provisions in the underlying bill by restoring the CTC that Democrats passed under the American Rescue Plan. That credit provided up to $3,600 for all children, including those in families with the lowest income and the greatest need. This was among the most ambitious and impactful anti-poverty programs in our country's history, and it was a lifeline for people like my constituent Daisy. Daisy is a teacher in Pasadena, California, and was able to use her monthly child tax credit payments to support her 4-year-old son and rebuild her savings, providing her with a sense of relief and security. Millions of families around the country, just like Daisy's, receive monthly checks of up to $300 per child for groceries, medicine, gas, diapers, school supplies, and all the basic needs. And this also, of course, made an enormous positive impact on a child's academic and social success. These checks were investments in America's families and America's future, and we now have the evidence to show that these investments paid off. In 2021, the expanded CTC lifted 2.1 million children out of poverty and cut the U.S.'s child poverty rate nearly in half. This resulted in the child poverty rate reaching the lowest levels ever recorded by the Census Bureau. And each of these millions of families has a story like Daisy's. In fact, official government surveys found that families primarily use the money for food, utilities, housing, clothing, and education. Parents continued to work, so the result was healthier, more secure families with children who have better opportunities, better health, and a more promising outlook for the rest of their lives. But then when it came time to extend the CTC, Republicans said no and instead worked to advance a partisan tax proposal that would have handed billions in tax cuts to corporations and the wealthy while doing nothing for the CTC. I'm encouraged that today's legislation chooses a different path by extending help to low-income children and families. And while I support these improvements to the CTC, they do not go nearly far enough. We need full refundability, greater benefits, and monthly payments, just like we had in 2021, thanks to President Biden and congressional Democrats. We know that we need these provisions because we have the evidence to see that. In 2021, they pulled millions of children out of poverty. It's up to all of us to do the same thing today. I will vote yes for ending child poverty by supporting this amendment. I hope our Republican colleagues will do the same. I yield back.
Mr. Doggett is recognized.
Thank you, Mr. Chairman, and I thank the gentlewoman for offering this amendment. What does a child tax credit really mean? What does it mean to lift so many children out of poverty? I think it means that some of those in our country who do some of the most humble and demanding jobs in our country are offered some hope. Hope that when their children will grow up, that they won't face the same struggles that their parent has. Instead of a latchkey kid, some child care. Being able to buy medicine when a child is up all night with an earache. Getting a new pair of shoes when that child outgrows the old pair. I support this amendment because I think it's essential that we do more to lift up children and their parents. And I oppose the underlying bill because I think it's fundamentally unfair. When that working mother with 2 children is paying an effective tax rate of 20%, and this committee comes out in the snowstorm to provide $220 million in a tax refund to a corporation that's paying 2%, I don't fault the corporation. I don't fault them for doing all of the extensive lobbying that they do here to ensure that they get their will done. But I do question the wisdom of our colleagues in supporting such a measure that does so much for those who have so much already and so little for those who don't. The cost of a permanent child tax credit as proposed in this amendment is very expensive. I think it's exceeded only by the cost of keeping so many children in poverty. As a rare pay-as-you-go progressive, as I describe myself, with only the most minimal exceptions on paying as you go, I think we need to pay for what we're doing here rather than saddle our children and our grandchildren with more debt. And while I acknowledge that one-time short-term pay-for is included, as I demonstrated in the chart earlier, by closing an abusive pandemic relief provision, it does not begin to pay for the true cost of the $600 billion in corporate tax relief that Chairman Smith correctly says he locked in. Republicans and some Democrats don't believe in offsets to cover the cost of most any tax break. I believe that it's important that we provide offsets and cover the cost of tax relief, including this worthy measure. And since, thankfully, we're no longer in a pandemic downturn, I support this amendment only if it is at least substantially paid for. After this amendment is rejected on a party line vote, I think the further question is, what position are those of us who may have differing views today, but all share a strong desire for a reduction of child poverty and most a desire for a fairer tax code. What position are we in working for working families come next year? And the position we're in is that corporations are today getting 100% of what they wanted, and we are being asked to accept a little less than 1/10 of the reduction of poverty we got that we wanted, and which would be achieved if this amendment were adopted. And the thin veneer that cloaks this corporate victory means that corporations immediately through these provisions and other businesses will get $3 to $4 for every dollar that is invested in our children. I just simply think that that is the wrong priority, that we should a competitive business environment with competitors around the world, that we should provide incentives for research. That's one of the reasons I've opposed Republican cuts to medical research in their budget. But that we should be balancing that out and recognizing that it's good for business, it's good for corporations if more people in America who are downtrodden now get a hand to be lifted up, to participate, to be the workforce we need to remain the strongest in the world. And the priorities of today would be adjusted by adopting this amendment. It should be adopted. It should be a bipartisan amendment. When it's not, we're faced with a big challenge in 2025. I yield back.
Ms. Moore is recognized.
Thank you so much, Mr. Chairman. And I absolutely support Ms. Delbenny's amendment. I'm speaking on behalf of mothers, grandmothers, and for myself as a great-grandmother, who says that it is totally unfair and it's sort of immoral to leave out the neediest, poorest children from being able to benefit from living in the richest country in the world and to be poor. You know, this act, even with the amended changes, discriminates against women who, for many reasons, do not work. Did you know that 20% of the kids in this country are disabled? What if a mom has to stay home because her kids are disabled? She will not benefit from these provisions. What about that grandmother who rescues her grandchildren from an untenable situation? Maybe their daughter or their son is on drugs or in prison. That grandma won't get a dime with these new provisions. And it's not fully refundable. So while we are providing some benefit to some families, I would say that at least 2 million kids, and probably millions more, will be left out. You know, Ms. Sewell has spoken about her district, and I know that she and Ms. Miller are from states, West Virginia and from Alabama, where the child poverty rate is 23%. So I think that there'll be more children from these districts and these areas who will not get any money. It excludes, again, the poorest people. Foster parents. I mean, if your child ends up in a foster home because you can't take care of them for whatever reason, we will provide money to those foster parents, the CTC to them, thank God. But you have to lose your kids in order for your children to get the benefit. That's just unconscionable. And since 85% of child removals are due to poverty, not because of any other sort of abuse, poverty, poverty is the main reason that they are taken from their mothers. We are incentivizing child removals so that the kids can eat. You know, and the other problem with this bill is that it locks in this limited child tax credit for 3 years, making this compromise agreement go on for longer than it should. We should change it today, immediately. And of course, as I mentioned, it locks in $600 billion of permanent tax cuts for corporations 55% of these corporations which pay no taxes at all, just like the women and grandmothers who are going to be denied the child tax credit who have no tax liability, except that they won't get the benefit of our tax code. I know that Democrats and Republicans have all talked about how much they care about children, how much they love children, how much they want to raise up a healthy workforce. All of us care about children. Well, now it's time to prove that, y'all. Here we are. Here we are with this amendment before us, which gives us an opportunity to demonstrate that even if your parent is poor, baby, we are not going to let you starve. And I would yield back the balance of my time.
Mr. Byer is recognized.
Mr. Chairman, thank you very much, and Ms. Dobeni, thank you so much for this amendment. I'd like to offer a different perspective. I am one of 6 children. I'm the father to 4. And our birth rate is the lowest it's been in our nation's history. 1 2/3 children per woman of childbearing age. And we have more and more people my age and ever fewer children, relatively. We have an increasing number of folks, too, who plan to have no children. Statistic I saw a few weeks ago said that a generation ago, 18% of women would have no children by the age of 40. It's now at 38%, so more than a doubling. And when you ask the millennials and the Gen Zs and the Gen As, double As, why no children? The number one answer again and again is because we can't afford it. It's just impossible to raise children. Not impossible. You have a really good income and a good education, yes. But for the rest of us, no. So the simple question as an economist is, where's our workforce going to come from? Already we have a 2-to-1 ratio between jobs advertised and people that are unemployed. We don't want to go the way of Japan and China and Italy. On Ways and Means, our responsibility is for the economic and growth and vitality of our country. But it's going to be difficult to do that with an aging population, difficult to do that with a dwindling number of children. So if we want a robust future for America, we need ever more children. And I think this is a very important step, and I heartily support it, and I yield back.
Mr. Smith.
Thank you, Mr. Chairman. I've appreciated the discussion we've had this morning. I have concerns about policies and their impact on our economy in the future, and I also want to hear out colleagues on their ideas. I'm also wanting to kind of stick to the deal that has been struck, and so there's some things that I would love to change about the agreement. Some that I could maybe even pick up some votes across the aisle for. But I have great concern that this amendment, aside from my concerns about the policies, but the amendment would actually chip away at and perhaps even destroy what is a hard-won bipartisan compromise represented in the bill as written. So the bill as written has broad swaths of support from both sides of the aisle in both chambers. And I think as a committee, we have an opportunity to stay on the course of getting that done. So I hope that this amendment will fail because, and again, aside from the policy, I have my concerns about the policy, but I even have broader concerns about the various discussions and balances that have been struck along the way. So I would strongly urge my colleagues to vote against this amendment and ultimately in favor of the bill. Thank you. I yield back.
Are there additional members to speak on the amendment? Seeing none, does the gentleman continue to reserve his point of order?
Withdraw it.
The gentleman withdraws his reservation. The question is on agreeing to the amendment offered by Ms. Delbene. The clerk will call the roll.
Mr. Buchanan?
No.
Mr. Buchanan? No. Mr. Smith of Nebraska? Mr. Smith of Nebraska? No. Mr. Kelly? Mr. Kelly? No. Mr. Schweikert? Mr. Schweikert? No. Mr. LaHood? Mr. LaHood? No. Dr. Winstrup? Dr. Winstrup? No. Mr. Arrington? Dr. Ferguson? Dr. Ferguson? No. Mr. Estes? Mr. Estes? No. Mr. Smucker? Mr. Smucker, no. Mr. Hearn? Mr. Hearn, no. Mrs. Miller? Mrs. Miller, no. Dr. Murphy? Dr. Murphy, no. Mr. Kustoff? Mr. Kustoff, no. Mr. Fitzpatrick? Mr. Fitzpatrick, no. Mr. Stubbe? Mr. Stubbe, no. Ms. Tinney? Ms. Tinney, no. Mrs. Fishbach? Mrs. Fishbach, no. Mr. Moore? Mr. Moore, no. Mrs. Steele? Mrs. Steele, no. Ms. Van Dyne? Ms. Van Dyne, no. Mr. Feenstra? Mr. Feenstra, no. Ms. Maliotakis? Ms. Maliotakis, no. Mr. Carey? Mr. Carey, no. Mr. Neal? Mr. Neal, yes. Mr. Doggett? Mr. Doggett, yes. Mr. Thompson? Mr. Thompson, yes. Mr. Larson? Mr. Larson, yes. Mr. Blumenauer? Mr. Blumenauer, yes. Mr. Pascrell? Mr. Pascrell, yes. Mr. Davis? Mr. Davis, yes. Ms. Sanchez? Ms. Sanchez, yes. Mr. Higgins? Mr. Higgins, yes. Ms. Sewell? Ms. Sewell, yes. Ms. Del Bene? Ms. Del Bene, yes. Ms. Chu? Ms. Chu, yes. Ms. Moore? Ms. Moore, yes. Mr. Kildee? Mr. Kildee, yes. Mr. Byer? Mr. Byer, yes. Mr. Evans? Mr. Evans, yes. Mr. Schneider? Mr. Schneider, yes. Mr. Panetta? Mr. Panetta, yes. Mr. Arrington? Chairman Smith?
No.
Chairman Smith, no.
How is Mr. Arrington recorded?
Mr. Arrington is not recorded. Mr. Arrington, no.
The clerk will report the vote.
The ayes are 18, the noes are 25.
There being 18 ayes and 25 noes, the amendment is not adopted. Are there further additional amendments? Ms. Sanchez.
Mr. Chairman, I have an amendment at the desk.
Mr. Chairman, I reserve a point of order.
A point of order has been reserved. The clerk will distribute the amendment, and I ask the gentle lady to suspend while the clerk distributes. The gentle lady is recognized for 5 minutes.
Thank you, Mr. Chairman, for yielding me time to speak in support of millions of American families who rely on the child tax credit. My amendment would provide that the child tax credit would be fully refundable for all taxpayers. Unfortunately, your tax scheme would leave out the most vulnerable of those deserving households. Under the American Rescue Plan, Democrats showed that making the child tax credit fully refundable works to cut child poverty. In fact, tax-writing Democrats advanced such a strong expansion of the child tax credit that we cut child poverty in half. I know that figure's been thrown around a lot, but it is substantial. Unfortunately, that expanded tax credit did not last, thanks largely to concessions made to appease only a few lawmakers with outsized and I would say unearned influence. Those vocal few for whom the term show horses rather than work horses applies were cruelly fixated on the cost of permanently extending the most transformative CTC changes. Under that narrow lens, they lost sight of the fact that by letting the expanded credit expire, Congress failed millions of families by neglecting the opportunity to reinvest in the children who represent not just our nation's future, but its continued economic prosperity and its security. Yes, it's hard to believe, but as the branch of government that has the privilege of holding the power of the purse, I feel very strongly that in this bill we could have really should have made a different calculation about who is worthy of receiving generous tax benefits. All of us represent thousands of families with children, yet we still collectively choose not to extend the key poverty-busting element of an expanded tax benefit that all too briefly transformed the lives of babies, children, and working families who really just needed financial relief. That failure, my friends, should keep all of us up at night. We should literally be tossing and turning in our relatively luxurious beds, questioning why the hell Congress decided that certain families are not worthy of receiving the child tax credit. I am offering this amendment as a mother who knows all too well how hard and how expensive it is to raise a child. Like many mothers in this country, I do it alone. But I am also offering this amendment as a lawmaker who is willing to humbly serve as a voice for the millions of children in our country who, shame on us, go to bed hungry every night. Because I, for one, recognize that the most vulnerable Americans matter. By voting yes on my amendment, we can prove to the American people that hungry children matter just as much as businesses. Because, quite frankly, the wealthy will never stop knocking on our doors to demand tax breaks, and our nation's biggest corporations will never be satisfied by the tax benefits that we enact for them. They will continue their expensive and extensive lobbying campaigns, but who lobbies for the hungry children, I ask you? Supporting my amendment should strike my colleagues as an easy and painless way to help me get to yes on the underlying bill. And with that, I yield back the balance of my time.
Further discussion on the amendment. Ms. Moore?
Thank you so much, Mr. Chairman. And let me just thank the gentlelady for offering this amendment. You know, this amendment says that every family should be eligible for the refundable tax credit. I just want to make a brief point, and I won't consume my entire amount of time, but just think about it. A stay-at-home mom, someone who's just had those twins and decided that she needs to stay at home, and her husband is a doctor making $100,000 a year, as Dorothy Brown, one of our witnesses at when we had Miss we had our group that came together under the auspices when we were in the majority to talk about inequities. Dorothy Brown was an author that talked about how the tax code was geared to away from stay-home moms and really provided more opportunity for men who were the breadwinners than not. And here's a good example. So you got the mom. Her husband makes $100,000 a year. She's a stay-at-home mom with her twins. And they would get the child tax credit. Unlike the grandma who's rescuing her twin children from maybe a drug-infested home who won't get anything. Or the grandmother that is taking care of the kids because the father is incarcerated, or because the twins are disabled. That mom who stays at home to take care of the disabled twins will not get a thing. Whereas, you know, a mom who stays at home with perfectly healthy and not needy necessarily kids, but who's married to a doctor or someone who works on Wall Street will get the benefit. And so I think that this amendment really speaks to the disparity in how we treat kids who all deserve to be fed and clothed and sheltered and loved. And we're saying that because the parents themselves don't have the capacity to earn enough money to have tax liability, we will take it out on the children. And so Mr. Chairman, I'm yielding back half my time. I hope that you're recognizing how wonderful I'm being. okay?
You're
Are you there?
wonderful, Ms. Moore.
Okay,
We
thank you.
appreciate that. Further discussion? Dr. Winstrup?
Thank you, Mr. Chairman. My neighborhood, there's a guy's a lineman for the power company, and he related to me. He said, "You know, I don't want this check. What I want to do is be able to afford a steak." And so I think people have to keep that in mind. What is inflation has done to people that are working, not working, has been debilitating. But this bill includes child tax credit changes that both parties can support, including an inflation adjustment and repeal of an existing penalty on large families. With divided control of Congress, bipartisan, bicameral negotiations are the only way to achieve success on tax legislation. And in that type of bipartisan agreement, no one will get everything they want. We have an opportunity to do something significant today. Advance legislation that helps families, workers, small businesses, and that can get approval in both chambers of Congress. Trying to undermine this agreement will not help hardworking families. It will not add jobs, and it will not create opportunities or prosperity. So I urge my colleagues to vote no on this amendment and vote yes on the bill.
Further discussion? Seeing none, does the gentleman continue to reserve his point of order? Oh, Mr. Gildy. Oh, sorry.
Mr. Chairman, move to strike last word.
Proceed.
Yield to Ms. Moore.
Thank you so much, Mr. Chairman, and I will not consume all of Mr. Kilde's time. I just want to say I'm glad everybody realizes that this is a divided Congress and you don't always get what you want. But don't forget the rest of the song. You get what you need, and these children need food. They need shelter. I'm so happy about the improvements that we're going to make with the low-income housing tax credits, because in my state, over half the people are paying 50% or more of their income for housing, which is unsustainable. I mean, these kids need somewhere to live. They need food. They need transportation, and they need health care. So you can't always get what you want, but if you try, you can get what you need. And I yield back.
Thank you. Does the gentleman continue to reserve his point of order?
I withdraw my point of order.
The gentleman withdraws his reservation. The question is on agreeing to the amendment offered by Ms. Sanchez. The clerk will call the roll.
Mr. Buchanan?
No.
Mr. Buchanan, no. Mr. Smith of Nebraska? Mr. Smith of Nebraska, no. Mr. Kelly? Mr. Kelly, no. Mr. Schweikert? Mr. Schweikert, no. Mr. LaHood? Mr. LaHood, no. Dr. Winstrup? Dr. Winstrup, no. Mr. Arrington? Mr. Arrington, no. Dr. Ferguson? Mr. Estes? Mr. Estes, no. Mr. Smucker? Mr. Smucker, no. Mr. Hearn? Mr. Hearn, no. Mrs. Miller? Mrs. Miller, no. Dr. Murphy? Dr. Murphy, no. Mr. Kustoff? Mr. Kustoff, no. Mr. Fitzpatrick? Mr. Fitzpatrick, no. Mr. Stubbe? Mr. Stubbe, no. Ms. Tinney? Ms. Tinney, no. Mrs. Fishbach? Mrs. Fishbach, no. Mr. Moore? Mr. Moore, no. Mrs. Steele? Mrs. Steele, no. Ms. Van Dyne? Ms. Van Dyne, no. Mr. Feenstra? Mr. Feenstra, no. Ms. Maliotakis? Ms. Maliotakis, no. Mr. Carey? Mr. Carey, no. Mr. Neal? Mr. Neal, yes. Mr. Doggett? Mr. Doggett, yes. Mr. Thompson? Mr. Thompson, yes. Mr. Larson? Mr. Larson, yes. Mr. Blumenauer? Mr. Blumenauer, yes. Mr. Peskrell? Mr. Peskrell, yes. Mr. Davis? Mr. Davis, yes. Ms. Sanchez? Ms. Sanchez, yes. Mr. Higgins? Mr. Higgins, yes. Ms. Sewell? Ms. Sewell, yes. Ms. Delbene? Ms. Delbene, yes. Ms. Chu? Ms. Chu, yes. Ms. Moore? Ms. Moore, yes. Mr. Kildee? Mr. Kildee, yes. Mr. Byer? Mr. Byer, yes. Mr. Evans? Mr. Evans, yes. Mr. Schneider? Mr. Schneider, yes. Mr. Panetta? Mr. Panetta, yes. Dr. Ferguson? Dr. Ferguson, no. Chairman Smith?
No.
Chairman Smith, no.
Clerk will report the vote.
The ayes are 18, the noes are 25.
There being 18 ayes and 25 noes, the amendment is not agreed to. Further amendments? Ms. Sewell?
I have an amendment at the desk.
Mr. Chairman, I reserve a point of order.
A point of order has been reserved. The clerk will distribute the amendment, and I ask the gentle lady to suspend while the clerk distributes. Proceed, Ms. Sewell.
Thank you, Mr. Chairman. I'd like to make an offer of an amendment that will provide a common sense solution, ensuring that the child tax credit funds get to those who need it most in a timely fashion. My amendment today would restore the provision that the child tax credit be paid in advance in monthly installments. If we on this committee wish to target and reduce childhood poverty, the best way to do so is to ensure that the funds provided by the CTC are made readily available to parents and guardians on a continuous basis. Mr. Chairman, I would like to submit for the record to the committee a report published by the Columbia University Center on Poverty and Social Policy entitled Research Roundup of the Expanded Child Tax Credit 1 year later.
Without objection.
Thank you. This report is a deep dive into the successes of the changes that we made in this committee to the child tax credit in the early days of COVID-19. The actions taken to expand the child tax credit with the inclusion of monthly installments help reduce child poverty to the lowest levels of record. Families were able to shore up their finances so that they could meet their basic needs. Expiration of the credit and loss of this monthly practice have resulted in some of the most vulnerable families among us reverting into poverty and financial strain. As I spoke about earlier, I've had lots of members of my constituents in my district, come up to me and really say, not only making it fully refundable, but providing it the funds in advance on a monthly installment was also a lifeline to them. So let us learn from the prior expiration of CTC and get our families back on track. I encourage all of my colleagues to vote in favor of this common sense amendment that would allow us to revert back to monthly installments in advance of the child tax credit. Thank you, and I yield back.
Further discussion, Mr. Neal.
Mr. Chairman, this is a superb amendment. Again, the whole issue of cash flow for people at the lower end of the economic spectrum, based on not only predictability but efficiency, makes a great deal of difference as we all do our household budgets every month. This allows those, again, at the lower end of the spectrum to do some planning on their own and to set their own priorities. It's self-fulfilling, and I want to pick up on what Mr. Byer said. It's essential that we have more population growth in America. You can see what's happened with other stagnant economies across the globe, and this is going to be a real issue for us going forward. So encouraging stability for families is essential, and Ms. Sewell's amendment is right on target. I yield back.
Mr. Schweikert.
Thank you, Mr. Chairman. There's sort of two parts and somewhat responding to some of the comments on this amendment and somewhat the other two. Fertility rates, I think our last year were down to 1.65. It's all over the industrialized world. I believe it is Hungary is a third or fourth child. They functionally buy you a house, and it's barely moved fertility rates. No country has come up with a magical, others who do huge amounts of subsidies and this and that. So if someone comes up with it, great, but we've spent lots of time looking at other countries. But that wasn't my primary reason here. As we were having this discussion, I was remembering a joint economic hearing we held a couple of years ago. And I'm doing some of this from memory, but it was a report from University of Chicago for PhD economists. And they basically, the punchline in here was actually the cruelty, the cruelty to the most impoverished Americans when you de-link work. It actually walked through the data sets and their models and basically said, even when you start to adjust for, okay, here was the left's child tax care credit, but when you actually saw what it did when there was no relationship to labor to work, the amount of poverty adjustment was substantially lower than the face number, but at the end of the 10 years, and this is at the end of the 10 years, particularly, let's get this one, deep child poverty would not fall at all with the CTC expansion. And as you go through parts of the report, at the end of the 10-year, the truly impoverished were actually worse off. So somewhere here, there's an interesting, honest conversation the left and those of us on the right can have of what makes people poor and what do we do about it? From our view, it's a linkage to participating in the economy that ultimately over time you build up your skills, you have higher income, you build up your skills, you have higher income. And trying to find where's the morality of we're going to help impoverished, absolutely moral, but what happens if you de-link labor, de-link work, and then, and look, it's the academics. You know, at some point, this isn't about my feelings. This isn't about telling a story. This is what the research says, is over a number of years, you actually made people's lives worse. There is a solution here. It may require a very different moment, a very different discussion of saying we need to help these poor families, but we need to help these poor families engage in labor. And then we could also have the side conversations of if anyone has a brilliant idea on fertility rates, because that's a particular fixation. And with that, I yield back. Mr. Speaker, or excuse me, Mr. Chairman, I would like to introduce this research document into the record.
Without objection.
And with that, I yield back.
Mr. Davis?
Thank you, Mr. Chairman. Coming into contact with a large number of low-income residents who live and work in the same location where my office is located, where I live, people that I'm in contact with on a regular basis, I agree with Representative Sewell. It is indeed a no-nonsense amendment. I strongly support it and urge its passage. And I yield back.
Further discussion, Mr. Doggett?
Thank you, Mr. Chair, and I appreciate very much the gentlewoman's amendment. I think this was one of the most important aspects of the reforms we made in 2021. It helped our poor families in their budgeting. They knew they could count on that check there every month as they faced various struggles and crises in their life. And there is a pattern in the amendments that have been presented here this morning. Each one, beginning with Ms. Delbenny's, then with Ms. Sanchez, and now with this really modest amendment that has a very minimal cost overall, we've tried to have an approach of trying to get everything that is needed to lift children out of poverty, and then do a little less if our Republican colleagues wouldn't agree, and then even a little less. And all that we ask for in this amendment is that the modest relief that they are permitting in this bill be delivered on a monthly basis so that it can be used more effectively by poor families. And they tell us they can't even do that, which is pretty incredible. I want to touch on what they can do in this bill and what they are doing in this bill again. There is a reason why the Wall Street Journal editorial board called this a retroactive sop to companies that already made investment decisions, and why the Conservative Committee for a Responsible Federal Budget said, quote, it irresponsibly offers retroactive windfalls that will do nothing to help the economy the retroactive provisions they term as pure corporate giveaways. So while our Republican colleagues refuse to simply give poor families that qualify for their modest relief by the month, what they are doing is going back 2 years and rewarding corporations for decisions they made 2 years ago and giving them a retroactive giveaway. I believe in encouraging research and development, but this isn't going to encourage a bit of research and development because that already happened 2 years ago. And so it is rightly condemned as a retroactive SOP. It is rightly condemned as irresponsible and a corporate giveaway. And of course, that's what its purpose is. It is a corporate giveaway. We have today added support for the old adage that neither wind nor rain nor snow will prevent this committee from delivering more corporate tax breaks. Totally unjustified corporate tax breaks, and that's what we have today. And let's talk about another one, because they really haven't explained the effect of this bill, which has a worthy purpose in terms of encouraging competitive American enterprise, but it's the details that are the problem. And another one of those impacts is with reference to private equity and what they are doing with the interest provisions in this bill. This is a day for celebration for private equity companies, and they do some good things in our economy. They help provide more efficient enterprise, but they've also gotten into a model of relying on debt in such a significant way that they drive companies into bankruptcy. I'm concerned about the impact in the healthcare field because I work on healthcare. The impact on nursing homes, where we see huge amounts of debt pile up, and some of these homes fail even after they have cut staff to the bone and delivered much poorer quality care. But if you look at what has happened with private equity, with companies like Toys R Us or Sears or Payless Shoes, or you look at the studies that have been done at Harvard about, in the Harvard Business School, about the effect of piling up these huge amounts of debt that private equity does, it has led to the death of one American enterprise after another. And so again, this committee, which is unwilling, our Republican colleagues, to support the very simple matter of simply delivering a check by the month so these poor families can make better use of it, are willing to go back 2 years and reward conduct that's already occurred, and are willing to encourage private equity to keep doing exactly what it's doing with new tax incentives for private equity to take over more and more of our healthcare system, which leads to much higher costs and burdens in our healthcare system, and to eliminate one company after another. It may be good for a few, but I don't think it's good for good, competitive American free enterprise. So if you believe in that kind of competitive economy, which we've heard lauded today, this provision in the bill does exactly the opposite thing. I support the amendment, modest though it is, and reject this bill as troubling as it is. I yield back.
Ms. Moore is recognized.
Thank you so much, Mr. Chairman. I just want to appreciate Ms. Sewell for offering this amendment. You know, certainly, as we all experience, you don't feed your kids or pay your rent on an annual basis. You know, it's very nice to get that check if you have some refundability. Most of us pay taxes and we find ourselves owing. But if you're poor, you're really tickled to death to get the earned income tax credit or get that you've worked and you get, your $400 refund. But actually, kids eat cereal on a daily basis. They pay rent on a monthly basis. And so this is just a common sense. People get paid, quite frankly, on either a monthly or 2-week basis. Nobody is asked to defer all of their expenses for once a year. So this amendment just keeps in step with the way people actually live. And if you're poor, you're more in need of a monthly stipend than anyone else. And so I agree with her. I hope that we'll all just vote aye on this common sense measure. I also want to point out that her amendment doesn't necessarily say that we have to do it former law or under the provisions of the AARP. That she's doing it on the bill that is before us, saying we ought to provide that benefit on a monthly basis. And so there's no increase in cost or anything for this amendment, and I'm grateful to her for offering it, and I yield back.
Mr. Evans.
Yeah, Mr. Evans, and thank you, Mr. Chairman. I too would like to add my strong support for Ms. Sewell's amendment. You know, I also want to answer my friend from Arizona's research. I didn't come prepared to offer all the other deeply researched studies that have the child tax credit does not stifle the desire to work. Yes, there's enormous dignity in work, there's value in work, but with the chairman's permission, in the next 24 hours, we will dig up the studies that show that the CTC does not suppress this. And by the way, if it did, would that mean that more parents, mostly mothers, were staying home with their kids? Is that so bad? In fact, with the explosion of homeschooling in America, across the political philosophy spectrum, a child tax credit that makes it so a parent can stay home with their child is actually a very good thing. And I ask all of us to support this amendment. Yield back.
Ms. Del Bene.
Thank you, Mr. Chairman. You know, we've done this before. We know it works, and the IRS was able to deliver. I want to yield the remainder of my time to Ms. Sewell.
Thank you, Ms. Del Bene. And I want to associate myself with all of my colleagues' remarks. You know, all we're saying is this current bill's modest relief that it's giving in the child tax credit be delivered to people in a way that they can be more efficient and effectively use it, and that's on a monthly basis. As Congresswoman Del Bene said, we know the IRS can do it. They did it in 2021. And this does not cost any money, this amendment, no money. I mean, I think that if we're gonna pass a bill, let's make sure that we're passing the bill and giving it to the people who need it most in the way that they can receive it the best. And I think that that is on a monthly basis. It has a proven success. We saw that with in 2021. I can't tell you time and time again, you know, how many constituents have come up to me and told me that receiving it on a monthly basis helped them to budget better, helped them to spend it more effectively and efficiently, and helped them to actually spend it in a way that they'd spend, you know, all their other money, which is month to month, not annually. And so I just wanted to reiterate that while this bill modestly increases the child tax credit, I think that it gives a bigger boost to businesses. And in fact, I agree with the Wall Street Journal's article and really would, Mr. Chairman, like to submit for the record Mr. Dayen, David Dayen, American Prospect article. Is called An Unequal Tax Trade. Can I submit this for the record?
Without objection.
Because what it said is that the tax benefits to businesses in this particular bill are 5 times as more generous to corporations than it is to families. Now, if we're going to do it, let's do it effectively, is what I'm saying, and let's make sure that we're delivering it to families as they go and not annually, and that would be monthly installments. I ask my colleagues to deeply consider this amendment and pass it. Thank you.
Further discussion. Ms. Tinney.
Thank you, Mr. Chairman. And throughout this 118th Congress, our committee's top priorities have been listening to the American families, workers, and small businesses, developing policy solutions to address their concerns and challenges. Because of Mr. Chairman, we traveled to field hearings all across the country to hear from hardworking Americans. We heard about price increases, fragile economy, concerns for the future. And I climbed in and out of a tractor with Ms. Moore, which was a lot of fun at a big, beautiful farm out in Minnesota. And over the past few months, we have worked across the aisle to advance important policies that produce jobs and give hardworking Americans a little more breathing room. Let's face the reality. We're in divided government, and the reality of bipartisan, bicameral negotiations is that not everyone gets everything they want, Ms. Moore. But at least, and I'll repeat, we aren't forced to get nothing and like it, as Judge Smales said in Caddyshack, one of my favorite movies. But I understand our colleagues have additional changes they would like to see in this bill, and so do I. I outlined about a dozen things that I'd love to see, all bipartisan pieces of legislation with great colleagues on the other side of the aisle. But we simply are in a situation where we don't have the opportunity to do that today. We do have a chance, though, to deliver on the important relief to workers, families, and small businesses, of which I am one of those today, and I really appreciate everyone's compassionate input. But I urge a no vote because we really need to get what we can done at this moment in time. And with that, Mr. Chairman, I yield back.
Further discussion? So the question is on agreeing to the amendment offered by Ms. Sewell. The clerk will call the roll.
Mr. Buchanan?
No.
Mr. Buchanan, no. Mr. Smith of Nebraska? Mr. Smith of Nebraska, no. Mr. Kelly? Mr. Kelly, no. Mr. Schweikert? No. Mr. Schweikert, no. Mr. LaHood? Mr. LaHood, no. Dr. Winstrup? Dr. Winstrup, no. Mr. Arrington? Mr. Arrington, no. Dr. Ferguson?
No.
Dr. Ferguson, no. Mr. Estes? Mr. Estes, no. Mr. Smucker? Mr. Smucker, no. Mr. Hearn? Mr. Hearn, no. Mrs. Miller? Mrs. Miller, no. Dr. Murphy? Dr. Murphy, no. Mr. Kustoff? Mr. Kustoff, no. Mr. Fitzpatrick? Mr. Fitzpatrick, no. Mr. Stubbe? Mr. Stubbe, no. Ms. Tinney? Ms. Tinney, no. Mrs. Fishbach? Mrs. Fishbach, no. Mr. Moore? Mr. Moore, no. Mrs. Steele? Mrs. Steele, no. Ms. Van Dyne? Ms. Van Dyne, no. Mr. Feenstra? Mr. Feenstra, no. Ms. Maliotakis? Ms. Maliotakis, no. Mr. Carey? Mr. Carey, no. Mr. Neal? Mr. Neal, yes. Mr. Doggett? Mr. Doggett, yes. Mr. Thompson? Mr. Thompson, yes. Mr. Larson? Mr. Larson, yes. Mr. Blumenauer? Mr. Blumenauer, yes. Mr. Pascrell? Mr. Pascrell, yes. Mr. Davis? Mr. Davis, yes. Ms. Sanchez? Ms. Sanchez, yes. Mr. Higgins? Mr. Higgins, yes. Ms. Sewell? Ms. Sewell, yes. Ms. Delbene? Ms. Delbene, yes. Ms. Chu? Ms. Chu, yes. Ms. Moore? Ms. Moore, yes. Mr. Kildee? Mr. Kildee, yes. Mr. Byer? Mr. Byer, yes. Mr. Evans? Mr. Evans, yes. Mr. Schneider? Mr. Schneider, yes. Mr. Panetta? Mr. Panetta, yes. Chairman Smith? Chairman Smith, no.
Clerk will report the vote.
The ayes are 18, the noes are 25.
There being 18 ayes and 25 noes, the amendment is defeated. Mr. Pascrell.
Mr. Chairman, I spoke about this before, the amendment that's before us. I'm going to leave the numbers in there as originally suggested. That's 60,000 and 120,000 in the case of joint returns.
Yes.
I reserve a point of order.
A point of order has been reserved, Mr. Pascrell. If you would suspend while the clerk distributes the amendment,
Sure.
and then we'll get to your amendment. Thank you, sir.
I want to make sure everybody knows what it is and looks at it.
Mr. Pascrell, you're recognized.
Thank you, Mr. Chairman. Mr. Chairman, we had debates since 2017 on double taxation. This committee, as well as others in the House and the Senate, have talked about double taxation, doing away with it. Here's a perfect example. What you did is you raised the taxes in 2017
on the wrong people. You raised the taxes. And so people could not deduct what they usually deduct when they do their income tax, what they pay in local property taxes. Now, you pay local property taxes differently in Montana than you do in New Jersey. You do. Take my word for it. Different in New York, Maryland, Illinois, Florida, California, Ohio. Very different. Property taxes are different. Well, why don't you run your government better so it doesn't cost as much? Running the government is different in Montana than it is in New Jersey. There are different needs. You know them just as well as I do. So this is a chance. Now, when I said 60,000 to 120,000, which was different when Lincoln was the president, of course, but when you look at it and you see what's happened since 2017, when other states are facing the same problem now the smaller states, the people in those states that pay property taxes, they're looking at this as well, which they didn't do in 2017 when they said, oh, this doesn't bother me. Oh, really? So we have a problem here. So what I'm saying is, let's look at that deduction, which would put that $10,000. Let's raise it to $60,000 and $120,000 for joint returns. I think that would be fair, so that the federal government is participating in certain expenses in that particular state, which would ease the tax burden in that particular state if people are getting back the money. I want to hear the baloney, because the statistics can be, ciphered out, that look at what rich people make on this. It's double taxation, regardless of how you put it. And I'm asking, I'm willing to change the numbers downward. I'm willing to change the numbers. But what I'm introducing is a Republican bill. You said it, not me. I'm not one of the ones that hung on and said, my way or the highway. Some Democrats did that as well as Republicans. That got us nowhere, I admit, Mr. Smith. But you will admit, too, even in your state, it's starting to be a problem, and that deduction put money into people's pocket, not just the rich. There are no rich in Paterson, New Jersey. They're the numbers, I didn't make them up. So I think this is a fair way to do it. And I'll take that Republican bill and introduce it myself, that amendment, and introduce it myself. I'm willing to lower that number. I'm going to call your bluffs. But let's be fair about it. Give me at least a shot. I'm introducing your bill as an amendment. And I'm going to vote on the final product, whether it passes or not. So you don't have to worry about threats and this and that. Who cares about that stuff anyway? Mr. Smith, thank you. I yield.
Thank you. Further discussion? Mr. Schneider.
Thank you, Mr. Chairman, and I support this amendment. In fact, helping introduce it, I want to thank Mr. Pascrell for leading the way. He is 100% right. The taxation of salt is double taxation. Individual states make their own choices whether they're going to invest in public schools, in public parks, in making sure that their governments are responsibly funded, and how they tax their citizens. What's true for the states is true for the local communities, and those communities are penalized. Some people say that the SALT deduction gives us an unfair subsidy to these states. Nothing could be further from the truth. In fact, you look at the states that are affected by it: California, New Jersey, Illinois, New York. These states are actually sending more in federal dollars to the government than they receive back. Double taxation is wrong. It's wrong on principle. I think the SALT deduction cap should be taken away completely, but I support this amendment, and as Mr. Pascrell said, I'd be willing to negotiate even a different number, but at the very least, let's do something to give relief to the working families in my district in Illinois and across the country that are unfairly paying a double taxation on their hard-earned dollars. I yield back.
Mr. Feenstra.
Thank you, Mr. Chair. Both of you, Pascal and Schneider, your points are duly noted. And I hope someday that we can have a hearing on double taxation. I'm pretty passionate about the death tax. The death tax is a double taxation. There's a lot of things in our code that have double taxation. But this is not the time and the place for that today. I think there's a point that we need to have that. What we have here is a bipartisan, bicameral, negotiated bill that gets most of what we want on both sides. A vote in favor of this amendment would destroy our ability to provide important relief for our working families and our small businesses. Is that what you want? Voting for this amendment would not expand access to child tax credits. It would deny working families expansion contained in this bill. Voting for this amendment will not help American business innovate, expand, and invest. It will make it harder for them. Voting for this amendment would not combat China or strengthen our economic partnership with Taiwan. And finally, voting for this amendment will not provide families with the needed disaster relief that is so passionately needed. So we have to look at this bill. The real benefits of this bill are exactly what we've talked about over the last 3 hours. And now we want to add something completely new called double taxation. I think that's for a different time and a different place, and I'd love to have that discussion. But today is not that day. Thank you, and I yield back.
Further discussion on the amendment? Seeing none, the question is on agreeing to the amendment offered by Mr. Pascrell. The clerk will call the roll.
Mr. Buchanan. Mr. Smith of Nebraska. Mr. Kelly. Mr. Kelly, no. Mr. Schweikert. Mr. Schweikert, no. Mr. LaHood. Dr. Winstrup. Dr. Winstrup, no. Mr. Arrington. Dr. Ferguson. Dr. Ferguson, no. Mr. Estes. Mr. Estes, no. Mr. Smucker. Mr. Smucker, no. Mr. Hearn. Mr. Hearn, no. Mrs. Miller. Mrs. Miller, no. Dr. Murphy. Dr. Murphy, no. Mr. Kustoff. Mr. Kustoff, no. Mr. Fitzpatrick. Mr. Fitzpatrick, no. Mr. Stubbe. Mr. Stubbe, no. Ms. Tinney. Ms. Tinney, no. Mrs. Fishbach. Mrs. Fishbach, no. Mr. Moore. Mr. Moore, no. Mrs. Steele. Mrs. Steele, no. Ms. Van Dyne. Ms. Van Dyne, no. Mr. Feenstra. Mr. Feenstra, no. Ms. Maliotakis. Mr. Carey. Mr. Carey, no. Mr. Neal. Mr. Neal, yes. Mr. Doggett. Mr. Thompson. Mr. Thompson, yes. Mr. Larson. Mr. Larson, yes. Mr. Blumenauer. Mr. Blumenauer, yes. Mr. Pascrell. Mr. Pascrell, yes. Mr. Davis. Mr. Davis, yes. Ms. Sanchez. Ms. Sanchez, yes. Mr. Higgins. Mr. Higgins, yes. Ms. Sewell. Ms. Sewell, yes. Ms. Del Bene. Ms. Del Bene, yes. Ms. Chu. Ms. Chu, yes. Ms. Moore. Mr. Kildee. Mr. Kildee, yes. Mr. Byer. Mr. Byer, yes. Mr. Evans. Mr. Evans, yes. Mr. Schneider. Mr. Schneider, yes. Mr. Panetta. Mr. Panetta, yes. Mr. Buchanan. Mr. Buchanan, no. Mr. Smith of Nebraska. Mr. LaHood. Mr. LaHood, no. Mr. Arrington. Mr. Arrington, no. Ms. Maliotakis. Mr. Doggett. Ms. Moore. Chairman Smith.
No.
Chairman Smith, no.
How is Mr. Smith recorded?
Mr. Smith is not recorded. Mr. Smith, no.
Clerk will report the vote.
The ayes are 16, the noes are 24.
There being 16 ayes and 24 noes, the amendment is not agreed to. Are there additional amendments?
Mr. Chairman, I got an amendment at the desk. Mr. Chairman, I reserve a point of order.
A point of order has been reserved. The clerk will distribute the amendment, and I ask the gentleman to suspend while the clerk distributes. Mr. Panetta, proceed.
Mr. Chairman, my amendment would add to this bill H.R. 6686, the Workforce Housing Tax Credit. As you've heard me say today and over other days, I appreciate what's in this package, especially for low-income housing tax credits. However, in a district like mine, we need to address housing for our workforce, otherwise known as the missing middle. Unfortunately, these workers who do not qualify for low-income housing, they may work in our district, but they are not able to afford to live in our districts. They end up spending too much time in our commute and too little time in our communities or with their families. To address this, I have introduced legislation with Chairman Wyden, Senator Sullivan, and Representative Mike Carey to create a workforce housing tax credit modeled on the LIHTC, which would help finance units for workers earning between 60 and 100% of the area median income. Our workforce housing tax credit would support the creation of nearly 350,000 affordable homes at a lower credit rate than the LIHTC program. It also allows the option to use their workforce housing credits for LIHTC if they want. I realize my bill and the amendment will not be added to this bill, but I do need to highlight my legislation because I am hopeful that we can continue working on tax policy to support workforce housing and working families. And with that, Mr. Chairman, I withdraw my amendment.
Thank you, Mr. Panetta. We look forward to working with you in hopefully future bipartisan tax packages after we break the dam on this one. So further amendments. Mr. Byer.
Mr. Chairman, I have an amendment at the desk.
Mr. Chairman, I reserve a point of order.
A point of order has been reserved. The clerk will distribute the amendment, and I ask the gentleman to suspend while the clerk distributes. Mr. Byer, you can proceed.
Thank you, Mr. Chairman. Mr. Chairman, this measure would make a simple but impactful modification to the Work Opportunity Tax Credit by creating a target group within the credit for employers who hire military spouses. Military spouse employment is the top issue impacting active duty families and the top contributor to financial stress among military families. Military spouses consistently experience unemployment rates substantially higher than the national rate, and 2/3 of employed active duty military spouses report underemployment. I was recently at a food bank in Lorton, Virginia, in my district near Fort Belvoir, and almost half of the people who came to pick up food that day, free food, were military spouses. Frequent moves often stall military spouses' upward career progression and force them to find new jobs. And this hurts military families and military readiness. My mother was a military spouse, and for 20 years, moving 6 kids every 2 or 3 years. So I'm keenly aware of the challenges facing partners of active duty service members who often have to relocate their families long distance. I'd like to thank Mike Kelly and Jimmy Panetta on this committee, along with Judge Carter, who chairs the Army Caucus, for their partnership on this piece of legislation, which would go a long way towards overcoming hurdles to employment that disproportionately affect military spouses. Given the widespread bipartisan, bicameral support for this bill, I'm hopeful that we can find an opportunity to move it forward to show military families that their service to this nation is truly valued. And with that, Mr. Chairman, I'll withdraw the amendment.
Thank you, Mr. Byer. As in with Mr. Panetta, we look forward to working together with future projects. So, Mr. Blumenauer.
Thank you, Mr. Chairman. I too will move to expedite so people can make their flights. But I do think it's important to place on the table the fact that this legislation includes an expansion to the low-income housing tax credit, particularly the provisions.
Mr. Blumenauer, you have an amendment?
Oh, I do.
Yeah,
I'm
okay. All
I
right.
was just trying to save time, Mr. Chairman.
I know, you're great.
Mr. Chairman, I reserve a point of order.
There's been a point of order. The clerk will distribute the amendment, and I ask the gentleman to suspend while the clerk distributes.
Are you not trying to save time, Vern?
Now you can proceed.
Thank you. I'm encouraged that this legislation includes an expansion to the low-income housing tax credit, particularly the provision lowering the bond financing threshold for housing projects financed by private activity bonds. This is an area that I've been working on for some time. The bond financing threshold is especially important for a state like Oregon. We've hit our statewide private activity bond capacity and therefore are not adequately able to meet available demand for critical low-income housing. While it's heartening that the committee is prioritizing community development tax credits, it's critical that we not lose sight of the suite of community developments available to make our communities more livable. My amendment would add the bicameral, bipartisan Historic Tax Credit Growth and Opportunity Act to this bicameral, bipartisan bill. Since its inception in 1976, the Historic Tax Credit has incentivized private sector investment in the rehabilitation and continued use of historic buildings. The credit has attracted approximately $173 billion in private capital in the last 45 years, creating nearly 3 million jobs and rehabilitating more than 45,000 buildings. And virtually all of us have them in our community. The historic tax credit revitalizes communities, spurs economic growth, and returns more money to the Treasury than the cost of the credit. The 2019 National Park Service report found that the historic tax credit has generated $5 billion more in revenue than it cost. In recent years, however, the value of the tax credit has declined relative to other community development credits. This is especially true for projects during the pandemic. Additionally, the complex and time-consuming nature of the nominating process has limited the credit's use for smaller rehabilitation projects. My amendment would address these limitations, modeled on legislation I've already introduced, by increasing the value of the credit, making more buildings eligible to take the credit, and expanding the credit to tax-exempt projects like community health centers, nonprofits, and more. I do intend to withdraw this amendment, Mr. Chairman, but I hope we can seriously consider the value of the historic tax credit and make improvements. And before I withdraw, I'll stop for a moment to see if anybody has any comments.
I would just like to add, Mr. Blumenauer, I have in the past co-sponsored legislation in regards to this area, and so definitely look forward to try to work with you on this. Thank you.
No
Further
comments?
amendments?
Then if there aren't any further comments, I will withdraw. Oh.
She has amendments.
Okay, then I will withdraw. Thank you.
Thank you. Ms. Moore?
Thank you so much, Mr. Chairman and Ranking Member and all the members of the committee. I love being on this committee because this is the place where we can really make a difference in the lives.
Ms. Moore, are you offering an amendment?
I do. I have an amendment at the desk.
All right. Just one moment.
Mr. Chairman, I reserve a point of order.
A point of order has been reserved. The clerk will distribute the amendment, and I ask the gentlelady to suspend while the clerk distributes.
I just couldn't wait. Did I get mine?
Gentlelady, proceed.
Thank you, Mr. Chairman. This is a very simple amendment, and it would provide for, instead of the 15% phase-in rate, it would change it to 40% phase-in rate. There's been a lot of discussion about the importance of the child tax credit and the numbers of children who are relieved from poverty because of it. But I came up with an example that you all may recall with our Joint Committee on Taxation that really challenges our notion somehow that people can actually work their way kind of out of poverty without any support. I don't agree with the notion that the child tax credit should be used as a work program. The whole idea of the child tax credit is a supplement that recognizes the expense of raising children. It recognizes that even if you're a mom, a stay-home mom, making $399,000 a year, that child tax credit, which you will get, the full child tax credit if you are married and you're making $399,000 a year, it would be helpful to get your kids the Boy Scout uniform that they know, big feet, outgrow their shoes 2-3 times a year, being able to meet the needs that your income may not allow you to do it. But in order for a single woman, say she's in a rural area, because I know that's really important to you all, working in the grocery store for $7.20 an hour, we need to have that phase-in rate be 40% in order for her to get the full tax credit. After we pass this bill, if she were to work her behind off 20 hours a week, which under our TANF legislation is all we expect any single mom to do. It is unfair and unreasonable to ask a mom with kids under the age of 5 to work 40, 45 hours a week in order to be able to access this credit. So if a mom is working 20 hours a week, has 2 children under the age of 6, this bill would say, let's have a phase-in rate of 40% so that she will be able to access the child tax credit, the same as the stay-home mom with her twins who makes $200,000 a year, or the married woman she and her husband both make $400,000 will get the full credit. Let's create that equity by doing it. And this is a compromise amendment for me because I agree with Ms. Delbenny. We ought to have a fully refundable tax credit and not associate this with work. There are no 5-year-olds who get jobs. We should not commute the responsibility of paying the mortgage or paying the rent or buying food or paying the car note on kids. And so this is a compromise amendment that I'm offering to say, yeah, let's make her, we don't want any welfare queens, so we're going to make her work, but my God, we should not be forcing her to work more than 40 hours a week. And this amendment will enable her to access the credit with working 20 hours a week, which is the only thing we expect out of a poor woman. And so I would ask my colleagues to offer this. Is there anyone else who wants to speak on this amendment? All right. With that, Mr. Chairman, I have heard several of my colleagues talk about how this is a negotiated bill, and so we need to pass it and fight to live another day. So what I will do at this time, Mr. Chairman, is that I will withdraw this with the promise that you're going to work with me to ease up on the unfairness of this to poor children. And so with that, I would withdraw my amendment.
Thank you, Ms. Moore. I definitely, the child tax credit is something that I have been an advocate for years, and I'm sure we can always find some common ground somewhere moving forward. plus you're a wonderful friend, and I appreciate it. Thank you, Ms. Moore. It's a great Missouri cheesecake. It'll do pretty good. Further amendments? Ms. Moore.
Amendment at the desk.
Mr. Chairman, I reserve a point of order.
A point of order has been reserved. The clerk will distribute the amendment, and I ask the gentlelady to suspend while the clerk distributes. Thank you. Ms. Moore, you can proceed.
Mr. Chairman, this amendment would add to H.R. 7024 a new section that modifies the low-income housing tax credit to include Indian areas as difficult development areas for purposes of certain buildings. And I would yield time to Mr. Kildee.
Thank you, Ms. Moore. Our Native American communities, including those that I represent in Michigan, have some of the highest levels of need for quality, affordable housing in the entire country. Families in tribal communities are almost 5 times more likely to live in poor housing conditions when compared to the rest of the nation. Parts of our tax code that are meant to encourage economic development should recognize the unique challenges that these particular communities face. But right now, our tax code prevents tribal governments from taking full advantage of key tools to support economic development, like the housing tax credit. This means they're at a disadvantage relative to other communities. We need to ensure the sovereignty of tribes is honored and that the tax code provides parity for tribal governments and communities. So I'm proud to join my friend Representative Moore in offering this very simple, common sense amendment to help build more quality, affordable housing in Indian country. And I hope that going forward, Republicans and Democrats that share concern about this issue can come together to support our effort. And with that, I yield back to Ms. Moore.
Thank you so much, Mr. Kildee, for framing that important. It's important to have good housing in Indian country. And you know, we have obligations to our Native American family. They have rights under our Constitution. And I would say housing is one of the things that one way that we have tried to pay back our Native American friends. I've worked for years on the NAHASDA when I was on the Financial Services Committee, and now on this committee as well. I'm still concerned about Native American housing. I just want to thank Representative Susan Delbene for the hard work that she has supplied in order to increase the supply of affordable housing in our communities. I remember going up to northern Wisconsin for a hearing on housing, and I walked into one Native American woman's home. You could tell she had fixed it up for my visit. Very tidy, very neat, very well decorated with Indian artifacts and so on. And I was in the house for 5 minutes before I started wheezing, coughing, eyes swelling from the mold. And my chief of staff had to drag me out of her house after 5 minutes. Those are the kinds of conditions that are rampant among our colleagues. Now, I had said earlier that about 50% of folks who are in my state pay over 50% for the cost of housing. And somebody texted me with maybe a fact check, a political fact check on that. But what I will say is that the lower your income is, the more likely it is you're going to be paying 50, 60, 70% of your income on housing. If you rent, you're more than likely to be paying that. So expanding the low-income housing tax credit is critical. And not providing this benefit to our Native American friends, I think, is an abdication from our responsibilities to Native American tribes. And so I would hope, Mr. Chairman, that this is something that we won't overlook in further meetings of, the time has come for us to address this. And so I would withdraw this amendment at this time, but I'm hoping that I can withdraw it with the notion that we're going to revisit this.
Thank you, Ms. Moore. I've actually instructed our team to hopefully do a field hearing at some point, just focused on Native American issues within the jurisdiction of our committee, because there's several different tax ones, and I know that you've been a champion at attending those field hearings, so definitely want to continue to work on that. Okay. We got it. Thank you. Further amendments?
Mr. Chairman, I got an amendment at the desk.
Mr. Panetta.
Mr. Chairman, I reserve a point of order.
There's a point of order made. Would the gentleman suspend while the clerk? I didn't have the right. Mr. Panetta, proceed.
Thank you, Mr. Chairman. My amendment would extend the credits for fuel cells, linear generators, and microgrid controllers for an additional 8 years. We're doing this because in the IRA, I was proud to champion the inclusion of the Clean Energy Production Parity Act to provide fuel cell credits to similar technology like linear generators and the first ever credit for microgrid controllers. Linear generators and microgrids, as John Larson knows well, provide clean standalone generation from a variety of fuel sources, including hydrogen, and are increasingly necessary in areas like mine where we need that backup generation. Unfortunately, the IRA cuts off those credits after only 2 years in 2025. This is especially a problem for fuel cells, which will only qualify for the new IRA technology-neutral credits when green hydrogen becomes widely available. That's why I've been working with Representative Tinney to extend these tax credits for another 8 years. The cliff is coming soon, and I urge the committee to address these and other energy extenders like the biodiesel credit before they end in 2025. And with that, Mr. Chairman, I highlighted this issue, and I know we need to work on it. I hope you do too, and I will withdraw my amendment.
Thank you, Mr. Panetta. We look forward to working together. Further amendments? Seeing none. The question is on the adoption of the amendment in the nature of a substitute. All those in favor signify by saying aye.
Aye.
Those opposed say no. In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. I will now recognize Mr. Buchanan for the purpose of offering a motion.
Mr. Chairman, I move the committee favorably report H.R. 7024 as amended to the House of Representatives.
The question is on the motion to favorably report H.R. 7024 as amended to the House of Representatives. The clerk will call the roll.
Mr. Buchanan.
Yes.
Mr. Buchanan, yes. Mr. Smith of Nebraska. Mr. Smith of Nebraska, yes. Mr. Kelly. Mr. Kelly, yes. Mr. Schweikert. Mr. Schweikert, yes. Mr. LaHood. Mr. LaHood, yes. Dr. Winstrup. Dr. Winstrup, yes. Mr. Arrington. Mr. Arrington, yes. Dr. Ferguson. Dr. Ferguson, yes. Mr. Estes. Mr. Estes, yes. Mr. Smucker. Mr. Smucker, yes. Mr. Hearn. Mr. Hearn, yes. Mrs. Miller. Mrs. Miller, yes. Dr. Murphy. Dr. Murphy, yes. Mr. Kustoff. Mr. Kustoff, yes. Mr. Fitzpatrick. Mr. Fitzpatrick, yes. Mr. Stubbe. Mr. Stubbe, yes. Ms. Tinney. Ms. Tinney, yes. Mrs. Fishbach. Mrs. Fishbach, yes. Mr. Moore. Mr. Moore, yes. Mrs. Steele. Mrs. Steele, yes. Ms. Van Dyne. Ms. Van Dyne, yes. Mr. Feenstra. Mr. Feenstra, yes. Ms. Maliotakis. Ms. Maliotakis, yes. Mr. Carey. Mr. Carey, yes. Mr. Neal. Mr. Neal, yes. Mr. Doggett. Mr. Doggett, no. Mr. Thompson. Mr. Thompson, yes. Mr. Larson. Mr. Larson, yes. Mr. Blumenauer. Mr. Blumenauer, yes. Mr. Pascrell. Mr. Pascrell, yes. Mr. Davis. Mr. Davis, yes. Ms. Sanchez. Ms. Sanchez, no. Mr. Higgins. Mr. Higgins, no. Ms. Sewell. Ms. Sewell, yes. Ms. Delbene. Ms. Delbene, yes. Ms. Chu. Ms. Chu, yes. Ms. Moore. Ms. Moore, no. Mr. Kildee. Mr. Kildee, yes. Mr. Byer. Mr. Byer, yes. Mr. Evans. Mr. Evans, yes. Mr. Schneider. Mr. Schneider, yes. Mr. Panetta. Mr. Panetta, yes. Chairman Smith.
Yes.
Chairman Smith, yes.
How is Mr. Higgins recorded?
Mr. Higgins, no. Mr. Higgins, yes.
Clerk will report the vote.
The ayes are 40, the noes are 3.
There being 40 ayes and 3 noes, the motion agreed to in H.R. 7024 as amended is ordered favorably reported to the House. Without objection, I ask the staff be authorized to make technical and conforming changes to H.R. 7024 and that members have 2 additional days to file with the committee clerk supplemental additional dissenting or minority views. There being no further business before the committee stands adjourned.